see, Zacian is a SS tier. All around the physical, Metal Claw, Rusted Sword, Muscle Band, attack weight. I could get Zacian. Discount ends in 24 days. I was gonna get Mew and Hoopa, but then you can get Zacian, which is an SS tier. Or you can get Darkrai. Oh, Darkrai. I already have Leafeon. I can get Darkrai too. Zacian or Darkrai? I actually don't know. Should I get Zacian or Darkrai? Speedster special. All-rounder. Sacred Sword and Play Rough. Let's see. And then there's Latias and Latios, which are the most expensive. Mewtwo and Zacian. So you can get Zacian here. All-rounder. Mew and Hoopa. Darkrai is number 70. Maybe I just get Darkrai then. Zacian or Darkrai? Participate in one quick battle. Let's see. Events. Returning trainer support mission. No, no, no. Let's see. So you can get Mew and Hoopa. You can get Zacian. Zacian or Darkrai? Darkrai is more expensive than Zacian. Zacian or Darkrai? Maybe I'll just get Darkrai then. I'll get Darkrai. Speedster special difficulty X. Suicune's expensive too. Suicune is where? I think I just get Darkrai, man. The Speedster special attack. Expert. $700 normally for 700. Okay, we will get Darkrai. I don't really like Darkrai that much, but it's an SS tier, so we will purchase Darkrai. Ugh. Okay. We got Darkrai. Got 31 of those gems. Got a free gem. Okay. Where the hell? Where the hell is the Darkrai? Okay, make favorite offense. So use Slick Spoon and Wise Glasses. Wise Glasses. Held items, all held items. Wise Glasses, upgrade, upgrade, upgrade. Need a bit more. Almost. Okay, missions. What are missions? Use your night move. Participate in quick battle. Quick battle. Roma Park.
Like 2.5% a year, and Elmer's Glue is roughly 2.5% of the revenue line. Okay, so like how much are they going to grow Elmer's Glue? Oh, Elmer's Glue hasn't really grown in 40 years, but now it's sold out in every store around the world. Literally sold out in every store.
What is this?
So you have to assume they're ramping up production of Elmer's Glue. So earnings were, I don't know, a few weeks later, and this trend has been going on for a couple of months now, or a few months.
Tutoring assignments.
So I traded Newell Brands via stock options, and sure enough, the company had like its biggest earnings like ever in recent history, because Elmer's Glue sales were up, I think, like 60%, which doesn't sound like a lot, but for a company that's only growing at 2.5%,
Donk Void and Nasty Plot.
revenue division, that's up 60%. That's a big deal. So the stock was up 17%. Now that doesn't sound like a lot, but you have to remember that this was a stodgy company, and the option premiums were like that big only, because no one was trading options.
Some poor soul was probably just selling calls thinking he's like, you know what, nothing's gonna happen.
Nothing, the stock never jumps.
Yeah, I'll be fine.
The stock never jumps on earnings, you know?
Someone actually bought my option.
But the story that goes all the way back to my childhood was, so I was always a hustler. I would do garage sales on the weekends. Like, this is way before Gary Vee was talking about garage sales. I would literally take the bus around the city of Dallas at like 5 in the morning. I would study the sales in the newspaper the night before. I would literally study the sales, and I knew that garage sales were managed by women.
Although really quick, before we go to that, are you looking at cutting costs and improving your business's bottom line? Well,
Managed by women, older women. And they were really good at pricing jewelry and antiques and stuff like that. But any item that was male-oriented, like train sets or baseball cards or watches or...
Where is it? Darkrai. Full heal. Special attack. Dark Void and Lasty Plot. Okay, let's use Darkrai. Let's try Darkrai. SS tier. See how good it is. I've never used Darkrai before. Let's try Darkrai. See if it's any good. I spent like 500 fucking Aeon gems on it. Ready, go. 5 minutes. Hey, it's a physical attacker? I thought it'd be a damn. My teammates are all in the same fucking area. Damn it, man. It dies quite easily though. Its attack is super strong. Oh, damn it. Time's up.
Or like anything that was male oriented, they just kind of discarded and didn't care about because it wasn't like up their alley. They didn't really understand it. This is pre-eBay when you didn't know what things were worth unless you had like a price list in a book and you would look it up to see what it's worth. So I would look for garage sales that listed items that were male oriented, knowing that they were more likely to be mispriced at the estate sale or the garage sale. And I would then take the bus, and you could usually only get one sale in to be first act. You had to be first. So I would get there at 5 in the morning and just sit outside the house until they opened up. And sometimes I hit nothing, sometimes I would hit stuff. I'd start every morning at the 7-Eleven. I would get Snapple flavored iced tea, because it was really early in the morning when I wake up. You drink coffee as a kid. So that was like 13, 14 years old. And one morning I walked in 7-Eleven, they didn't have any lemon flavored Snapple iced tea, which I used to get. And I was like, what's going on? He's like, well, instead of having 2 full refrigerators of Snapple, this is back in the day when Snapple was everything. It was only half of one door of Snapple. He's like, there's competitors now, Arizona, other iced teas. He's like, that's all we're gonna have from now on. So I went home, talked to my older brother, who's a stockbroker. I was like, can I make money on this? He's like, well, maybe. He's like, he taught me how to short Snapple put options, right? And so I had $300 saved up from all these garage sale trades I'd done. I gave him the $300 in cash. I said, can you do that for me? He said, yeah, I'll buy some puts on Snapple. They have earnings in a few weeks, whatever. So he bought them puts. And Snapple was one of the hottest companies in the world at the time. That was the first earnings. They missed earnings because it said inventory was building up in the channel because retailers were not giving them as much shelf space. So I was a 13, 14-year-old kid that saw something that people working on Wall Street didn't even see. And that stayed with me. Like, how did I see that as a kid just going into 7-Eleven? How did the guys that work on Wall Street that manage billions of dollars, how did they not see that? It's just so right in front of your face. And what I realized was that people that work in the financial industry, their brains aren't tuned to like see things like that. They're focused on financials, they're focused on technicals sometimes. They're part of a herd mentality, and they all kind of live in one area of the country, or at least they did back then. They were mostly male, and they mostly thought one way. So there were lots of opportunities to see things in areas of life that they weren't really focused on, that they would miss. So the same way that I would look for male-oriented items at garage sales, I spent a lot of time in my early years trying to detect change with female-oriented trends and products and brands, or brands that were young or youthful, because an old white guy on Wall Street didn't really pay attention to things that were youthful or female or things that started trending in the middle of the country. So I remember some of my big trades from back in the day were like P.F. Chang's or Cheesecake Factory, because think about a guy who lives in Manhattan. He just never seen a P.F. Chang's. He doesn't understand the degree of buzz that was happening in places like Texas when there were people eating Chinese food for the first time, right? Or thought they were eating Chinese food. Like, you don't understand, there was like a 3-hour wait to get in that place. They didn't understand how big of a deal that was, that they would be able to open hundreds of thousands of these places, and every one would be exactly like that with 3-hour waits. They thought it was probably a fad, but no, like people outside of these cosmopolitan regions had never had Chinese food. So it's all about, I always say it's not about being really smart, it's about being smart in a totally different way than others. That's what pays dividends.
And then what job did you get that you worked at for a while to then go into investing full time? And after that, what were some of the most pivotal trades that you've made in your entire life? I love the stories. Yeah. Maybe like a big swing one and a big, positive swing and negative swing.
Yeah, I mean, so like I traded a lot as a young kid, and I was having fun with it. It was kind of a bit of a gambler. I was trading options. I traded through college when I was at SMU, and then I kind of, you go through a life where you start doing other things, and you just get distracted, and that's what happened to me. Like, I just stopped trading for a while. I just wasn't interested, and it wasn't until I guess my mid to late 20s, when I was having a real life with a wife and planning a family and wanting things, big things like houses and stuff like that, and thinking about my retirement. And like, you grow up, and like, dude, life is expensive. And I was working just a normal job. I mean, my job was at a tech company. I was helping to build the world's first online research panel. I helped build a company called eRewards that ended up controlling about 1/3 of all the research panel in the world. Meaning anytime someone's doing a study, someone has to answer that study. And we basically took research panels and moved them online. But it was, at the end of the day, it was just a job. I was making good money. I was making like $200,000 a year.
That's fantastic.
Yeah.
When was this?
This is in like the mid-2000s, early to mid-2000s.
Okay, that's incredible.
Yeah, but I had accelerated my career. I was a bit of a hustler in my career as well, right? So I climbed the ladder pretty quick. And I was a sales guy and a biz dev guy, and I just, I was a serious person, right? Like I just, for better or worse, like whatever I'm doing in my life, I'm serious about it, and I'm pretty aggressive. And so I was aggressive with my career, and I was doing well, but I still wasn't doing as well as I wanted to be. I wanted to be way better than that. And I was like, there's no way I can really climb this career any further. It was really tough. I was getting frustrated because, I was looking at guys around me who were like C-level. I was like, I should be making that much money. I should make $1 million a year. I was looking at guys on Wall Street, and I'm like, I should be making $2 million a year. But it's hard when you're in a career, and that's what I'm talking about when it comes to the income gap. I was in a good place, but for most people, but not for me. You know, a lot of people are in that same situation, but instead of making 200K a year, they're making 60 or 70 or 80 or 30. And quite honestly, they didn't have the privileges that I had in my life. You know, I grew up great family, wealthy neighborhood. I had access to all kinds of smart people, you know, and I could take risks. Most people just don't have the ability to escape. They don't have that escape velocity. There's no way to escape whatever your income is, whatever your profession is. So the only way for me to escape it was through the market, and I knew that. I was like, in the market, I can do whatever I want. I can be whoever I want. I could like have a job that pays me this much, but I can make this much in the market. I started with $20,000. I actually had $87,000 for my name. I took 20,000 to 87,000. I said, I'm going to take this 20,000 and I'm going to do the type of trading I did when I was a kid, just trying to connect dots, look at change and connect dots. I'm not looking at financials, I'm not looking at technical. By the way, I read it. I was like, none of that stuff's for me. I tried investing in commodities. I used to go to a commodity store and I would buy silver bricks of silver and like read the silver price and I'm like, screw this, I've been in this thing 9 months, about $5. So commodities not for me, right? I went through every type of trading, technicals. I was like, this is boring. I can't look at these charts all day. Like, it's not my temperament. I don't want to live my life like that. Looking at computer screens and charts, it's not me. So I was like, I had to find something that worked that I was going to have enough fun with to get serious with it. So I was like, I'm going to do it. I'm going to see if I can do it. I started with 20,000. And then there was this thing called Covestor. Covestor was the world's first portfolio tracking service. And it would track like 45,000 accounts. A lot of them were ex-hedge fund guys. You would load up your account and it would see how well you're doing. You competed against real traders around the world. This was back in the 2000s, a long time ago. Well, sure enough, I was doing pretty well. I turned that $20,000. I'll never forget this. I turned into like, oh my gosh, I was like at 400,000. I was like, 20,000. I was like at 400,000. I remember going to my buddy Patrick, who was my best friend, who worked at the same company. I said, I'm going to turn this into $1 million. And 3 months later, $2 million. And then a little bit later, it was $2 million. And so I became the #1 investor on Covestor in the world. That was the tracking. And then I got a bunch of media attention for it. And I was like on the news. I was on like Fox Business talking about it. And then I got a book deal. To write a book about this methodology, how I turned 20,000 to 2 million in 2 years. And I said, this is it. I got $2 million. Done. I'm done working. Quitting my job. Quit. I was done. Like, I'm never working again. And I said, I'm going to take the year off and write the book. So I took the year off. I was having twins that year. My wife was pregnant with twins. And I worked at Starbucks. Every day I go to Starbucks and I write my book. For a full year. And I wrote the book. And it's called Laughing at Wall Street in 2010. And all about my life and how I got there and all the stories, all the trades that got me. I literally talked about all the big trades that got me there. Trades like Uggs, trades like Crocs back in the day. All this stuff. What do you call it? The Gene Company, True Religion, like all these old school companies back then. They were all. It was all like female and youth. Heavy female, heavy youth trends. I was picking up on all these trends a little bit quicker than other people, connecting the dots, and all stupid, simple stuff that an idiot could see. Like, there was nothing sophisticated about anything that I did. No, I'm just like a big idiot at the end of the day. Like, there's nothing sophisticated. I'm aggressive, I'm resourceful, like, I think big, but, like, I barely passed high school, guys. Like, I was the bottom quartile of my high school class. I've always been a little bit off in the way that my mind works, and I never could figure my books and stuff, and just it was never my work. Like, if you give me something I'm interested in, I'm all in. Today, as you know, I told you, I'm up from 10 p.m. to 2 to 3 a.m. every night a year. All I do is social research. All I'm doing is reading comments on TikTok videos, looking for the next thing that's trending. That's literally all I do every night, 7 nights a week. Friday, Saturday, Sunday, Monday, Tuesday, everything. So I had all these big trades, man, and it just, before you knew it, it just kept growing and growing. It has never stopped. And I'm on my 18th year of social trading. I know this is so hard to believe. I don't believe it myself. Every year, I say to myself, the last year was the last year of this is going to happen. And it happened again, and it's happening again this year. My account's up like 100% again this year.
Even if you think it's a bit overhyped, AI is suddenly everywhere, from self-driving cars to molecular medicine to business efficiency. And if it's not in your industry yet, I guarantee you it will be very soon.
But AI needs a lot of speed and processing power. So how do you compete without your costs spiraling out of control? Well, that's why it's time to upgrade to the next generation of the cloud, Oracle Cloud Infrastructure, or our sponsor, OCI. For those unaware, OCI is a blazing fast and secure platform for your infrastructure, database, application development, plus all of your AI and machine learning workloads. OCI also costs 50% less for compute and 80% less for networking, so you're saving a ton of money. Thousands of businesses have already upgraded to OCI, including Vodafone, Thomson Reuters, and Suno AI. And right now, Oracle is offering to cut your current cloud bill in half when you move to OCI. This is for new U.S. customers with minimum financial commitment, and the offer ends March 31st. So see if your company qualifies for this special offer at oracle.com/ice. Again, it's oracle.com/ice, with the link down below in the description. Thank you so much, and now let's get back to the podcast.
It happened during the pandemic. You guys know the pandemic. I can talk about this publicly, so I'll talk about it. So I made $30 million a year of the pandemic trading, and starting with an account that had $4 million. So I turned 4 million into like 34 million or something like that. Or like, I made 30, I was up 35 million at one point. It was because I was converting Chinese newspapers and medical reports. I was using Google Translate on every single person in China that was in the medical industry talking about COVID when it was breaking out over there. And I became obsessed. I was like, this is it. This is the big one. This is the one I've been waiting for my whole life. Not like happy that we have a global virus, right? But I was like, I knew that things happen really big that the world just does not cannot mentally grasp until it's right in front of their face. If you can capture a little bit early, these things don't come around so often. And AI is one of them. I read less of it. By the time it was COVID, so I took like 10% of my account buying weekly puts, and I lost all my money every week for like 3 weeks. I lost 30% of my net worth in 3 weeks because the market wouldn't move. I was like, this is crazy. A virus is about to literally stop the entire world as we know it. We're about to have our first pandemic of our generation, of our lifetime. We never knew this was possible. The market's going to crash, and it didn't crash. And no one's talking. I'm like, why is no one seeing this? Why is no one seeing this? And I remember like CNBC had this episode the first day the market dipped 2%, and I was watching CNBC. I'm never watching CNBC, only to see when they would see what I was seeing and start talking about it. And all the guys on like Fast Money were all like, this is the moment we've been waiting for. The market dropped 2%. Here's your chance to get back in the market cheap. Wow. I was like, what? The market was like breaking all-time highs. It dipped 2%, and their reaction was, what an opportunity to buy more. I'm like, I almost stupid television. So I was gonna go broke if this happened a few more weeks. So I was gonna stick with it. I did it again, weeklies. Another week. I was basically buying puts on the S&P, and I was buying puts on casino stocks and airlines. Whoa. So it's casino stocks, airlines, and then the S&P at large. And then when it hit, and man, it hit. And so it was like it hit. And I know I feel terrible talking about this in a positive way because it's like the most devastating thing. It's like in my mind, I'm like, I can't do anything about the pandemic, but I can make money and then use that money in a good way to help people. And that's what my life's about. That's why I put all my money in the foundation, right? To help kids. But like, I was like, I'm gonna make a lot of money. With money comes power, comes leverage to do good in the world. That's my whole philosophy. So yeah, it hit big, and the money was insane. It was big, way bigger than what we just saw on a daily basis. So, and then the craziest part was the whole time, I was like, this is wild, because there's like 15 companies where this is actually a good thing, not a bad thing. Shopify, Amazon, Peloton, companies that make anything that would be advantageous to people that don't leave their homes anymore. You know what I'm saying? Like, RVs, RV companies, and tech companies, all the stuff ended up booming because of work from home. I was like, it's too early, the world doesn't see it. So I had all these companies ready to go, and I was getting my call options on all of them. I was like, I can't do it until people are like flushing this trade out. And I waited 2 days after the market bottomed, when it started to come back up, like, I think it's time. And so I put on all my long trades, got on my short, put on all my long trades, and that's when it got really nuts. And it's like,
what would you say your biggest dollar amount day is?
Back then? A few $1 million, $3 million a day or something like that. Yeah. But for an account that started off at like $4 million. You know, like at the beginning of the year, the account was $4 million, $4.5 million. So it was crazy. And then and then the worst part is after that year, it messed with my head, and I went a little crazy. And you know this, because I had dinner with you shortly afterwards.
You were telling us about.
All right. It is what it is. I got into NFTs. Okay. We all went a little crazy during the pandemic. We all go crazy in our own ways. Okay. I went nuts because like I joined this text group and a lot of really interesting people. It all started with that. Logan Paul was on a chain with Gary Vee and about 12 other guys that bought crypto. And one of my buddies was on that. As soon as they got off of that, he texted our group. He was like, guys, I just got off this crazy Zoom with Gary Vee, and like we're all buying crypto punks. I was like, I want to buy crypto punk. So I bought my crypto punk, and then it just went nuts. The whole NFT, and I bought all these NFT projects early, and it went nuts. And I just got addicted. It was fun. We were all stuck at home during the pandemic, and I had this really cool group of like really interesting people, and we all got into NFTs together, and we were talking about them at 2, 4 in the morning. We were just having fun with it. It was like little mini communities. It was one of the funnest things I had done since I was a kid. Like little pieces of art. We're kind of investable. We're all kind of mentally insane from the pandemic anyway. And like nothing was real. There were meme coins. There was GameStop. Like I was like, this is the future of art, you know. And like I went in, and I ended up actually not losing money, believe it or not. So I actually sold most of the NFTs relatively close to the peak because I saw what was happening to the market. It was a liquidity issue. You have to have additional liquidity. And when I just realized that Coinbase, their NFT marketplace, wasn't really anything that anyone was going to do, it's like I gotta get out of this. The problem was I was so consumed by NFTs that I missed the entire like reversal of that market the next year, and I held on to some of those positions too long, and I wasn't shorting the market where I definitely would have.
Damn it!
So distracted. I probably lost $100 million that I could have made that year, I think. So, and I also did. I I had this concept of working with the creator economy to build real businesses, and I partnered with this ice cream kid, Dylan.
I remember that.
Yeah, I poured millions of dollars into doing a super fun ice cream shop in Manhattan, and for various reasons, like a multitude of reasons that were out of our control, that business didn't work. But it's not about the money I lost in that business, it's about my time. So I became really distracted for about a year and a half, 2 years. And it was a critical 2 years when I could have really killed it. And after that whole experience, I said, that's it. I'm back. I'm not letting anything else distract me. In fact, I said I'm not investing in startups anymore for the most part. Like, 'cause I used to take that. I'm in 100, almost 150 startup investments, right? It was like too much of my time. I'm going all back into the thing I'm great at. I have a 17-year track record of like 70+% annualized returns in the market. What am I doing anything else but that? I'd be insane, right? Like, why would I do anything but that? And so I got back in it, and I've been back in it now for a couple of years, and I've had 2 of the best years of my trading. It's wild. It's wild. And you know what? I love it so much because I'm re-engaging with my community again. I have thousands, we have 50,000 people that do this type of trading. So it's a lot of trading that I kind of wrote a book about, 15 years ago. And they love it, and we're just like a community, and we're looking for change in the world, and we share ideas. And I'm back with Dave and Jordan, we're doing weekly.
屁股 Noli 又进来了，
And you know, a lot of
屁股 Noli 没睡觉。
brand popping or a brand falling apart. Like I talk about that right now. Nike, I think, is still falling apart right now, and there are other brands that are really hot. Not investing in. So we try to get ahead of the trends and invest in them. It's literally that simple. How fun does that sound? There's no fun is investing in them.
A big moment, I think, where I remember your channel popping off. Fake Pokemon box.
So
You did
that
live
was
stream.
yeah, but that was like a different thing. That was the NFT. That was during the NFT days. And so one good thing came out of that though. I met a guy, Gary King Pokemon.
Yes.
From that, and I had this concept. Logan Paul bought the most expensive Pokemon box. So I was going to buy the most expensive one on top of that, and I was going to auction off and give it away for charity to my foundation, just to have fun. I was like, this seems so fun, Pokemon, and so I did it. And it didn't really make much money. Like I ended up giving hundreds of thousands of dollars to kids, charities, but. The market had come down on Pokemon a little bit during that period, but I met this guy, Gary King Pokemon, and he introduced me to another guy, Matthew, who was starting a Pokemon trade show. And he's like, this guy's really smart. Chris, you have money. You believe in this world. I'm like, I do believe this world's gonna be big. I believe like that whole world of anime and like trading card games is a world that most people on Wall Street, they don't believe it. They don't understand it. They think it's too nerdy. I love nerd culture. I think nerd culture is going to grow massively over the next 2 decades. And so I wanted to invest in nerd culture, and I was really trading PSA at the time, like collectors, and then it was funny because that got acquired by Steve Cohen. I have a good story about Steve Cohen too. I never talked about it, obviously, but he bought that. I was like, dude, I was trading that. I want it, and he acquired it, and I was like, that's BS. That stock is gonna double if he didn't acquire it. So I invested in this trade show, and now Collecticon is like a major trade show. We're doing 18 shows next year. It's weird how when you do things in life, you never know how they're gonna play out. So I tell people, just do a lot of stuff, meet a lot of smart people, and just engage with people in a positive way and do good things for them. You never know how it's going to come back and reward you. Because like that whole time that like I was doing Pokemon stuff, I didn't make any money from it. It was just a fun thing. I was having fun with the community, with all these big Pokemon people. Like there was nothing in it for me at all. Like zero. It cost me. I did that.
I did. I was there, and you gave me the empty boxes. I still have them on display.
So do you know Steve Aoki did that with me? So that party cost me $100,000. So you're like, Chris, you spent $100,000 to give away $300,000 to kids charities, and you got nothing from it. At the time, I really thought I was very nice by doing that in the community, and they were like, this is the guy that we can introduce to people. I ended up owning a big chunk of this trade show. Now it's a huge, big global trade show worth potentially insane amounts of money. So it's funny how life rewards you in weird ways. You just gotta go out and do stuff. You know?
I'm really curious when you do social arbitrage, because I think that's really interesting. What do you look for specifically? And before you go into that, I do want to say that I've seen Macy honestly picks up on a lot of things before they become like mainstream. One of the things that she's gotten really into that I've never heard of before, and they're gaining a lot of popularity, the little figurine called Sminskies. You've heard of this?
I've heard of everything. It's all I do.
She's into this. She's showing me these communities on like Facebook and Reddit. There's like a Sminskies. They're getting in Japan, and she was like, "Oh my god, this place sells Sminskies," and we bought like 12 of them. And some of the stores, they're so popular that they limit them to like 2 per customer. These little figurines, and like there's a rare one, and I'm thinking like, this is something that before anyone else gets to it, and like
So you have to understand something. So Wall Street, we always say that Wall Street's rigged. It's rigged in our favor. Like and it pisses me off when people say that Wall Street's rigged for like institutions and hedge funds. It's not. It's rigged in our favor. Wall Street still today, their best alpha, the very best alpha that Wall Street has, is access to credit card data, and they've had it for like a decade. So they get, I have this data now, right? So like they get all the credit card data, and they know what people are buying and selling in like weeks behind. So like they know what people are buying and selling 2 weeks ago, like not selling, what they were buying in stores. But the data's dirty. It's not that great. It's not even that reliable. That's the best data they have. But we have better data than them. We have data that they are not willing to even look at, and it's data that they wouldn't even know what to do with because it just their heads don't work like this. So you know, I had a company, Ticker Tags. We were the first social data intelligence company right now. So I taught hedge funds how to interpret social data, conversational data. Like, so when I say social data, what I mean is conversational data. People speaking to each other, real humans speaking to each other about what they're doing that night, where they're going out, what they want to buy, what shoes they like what movies they like. That data is so rich, and it is the gold standard for investors. Because what do people do before they buy something? They think about buying it. They talk about buying it, right? They converse with their friends on social, like specifically the gold standard I tell everyone for the last 6 years has been comment data on TikTok videos. Because back in the day, I used to analyze Twitter, and my intelligence platform, we had to deal with Twitter. We basically had 10% of all the tweets in real time, and we created an index of 1.4 million word combinations that represented every brand and product on Earth, and anything that would be spoken that could be relevant to a publicly traded company, and we would monitor the volume of conversation around that topic. So I can tell you if people were starting to talk about that thing that you just mentioned, right? More than a month ago or a year ago. I can tell you if people are starting to talk about the iPhone, or how many people talk about the iPhone in the 7 days before its release compared to 5 years before that in that 7-day period. So using conversational data to measure interest in relevant topics that are really important to publicly traded companies. So that's data that anyone in the world has access to. Just go on TikTok and start getting comments and conversations. Literally, just do that. That's what I do. That's how I'm generating all this money. I'm reading comments on TikTok videos. That's my alpha.
What are some of the things that you're seeing right now? That smaller things, like before we go to robots, give us small examples.
Also, if the average viewer out there wants to try to take something away from this conversation, implement it in their own investing strategy, would they go and make bigger sized plays on fewer companies or more plays on more companies? Like how would they
It doesn't matter so much. Like how you trade doesn't matter that much. Everyone focuses so much on the product. It's all about alpha. It's about finding information that other people haven't found out yet, that's meaningful to a publicly traded company. It's that simple. So I think Crocs are crashing.
Malie is not saying anything. Like she must not be in the room.
I believe that Elf Cosmetics is doing better than the market. The Nike's not doing so great right now. So I'm sure
Oh, she's cooking? Okay. I thought you were AFK. Because a lot of people are just in the live but don't say anything, so I assume they're not there.
I see what people are talking about. I see how they're talking about it. I see where the buzz is. Vans are doing really bad. Vans is, the company that owns Vans, VF Corp, also owns North Face. North Face isn't doing too good right now either. And so they're trying to pull a turnaround, but the turnaround isn't working. So I'm evaluating people speaking about Vans, and like no one's speaking about Vans. It's just not happening. So I'm short VF Corp. So these are kind of some of the little trades that I'm involved in right now that might only last a few weeks. And no, I'm not putting 10% of my portfolio on them, but this is more historically what I've done, right? Fun trades I've talked about in the past is there was a time about a decade ago when women started to transition from wired bras to bralettes. Bralettes are bras without wires in them. And Victoria's Secret made their brand on wired bras. Bralettes cost about a third of what a wired bra costs. The margins are much lower, and Victoria's Secret didn't even sell them when they were coming into style. Right, so it was hugely detrimental to Victoria's Secret when women wanted unstructured bras.
How do you know this?
Because I see people starting to use the word bralette, and I said, "What is the word bralette?" Oh, okay. Now, once you see the little bit, then you start researching it. And you start researching, and you're like, "Oh my God, a lot of women are talking about bralettes." In fact, at the time, they were talking about either wearing bralettes or no bras. It's like no bra. So it was like this error when people didn't want push-up bras, because Victoria's Secret built a reputation on wired push-up bras, which were really popular for 20 years, right? And so this is really detrimental for that brand, because one, they were late to start selling bralettes, and then even when they started selling bralettes, the market for bralettes were so cheap and the margins were so thin that every customer that bought a bralette instead of a bra, they made less money on it. So they were getting killed from every angle. So if you're the first to detect that change in the world and then connect the dots of who's going to win, who's going to lose, who was the winner? Aerie. Aerie was one of the first brands to start selling bralettes. So they benefited from the bralette trend. Victoria's Secret was harmed by the bralette trend. So that's a really weird random example, but I have about 80 of those over the past 18 years. So over the past when you say, Chris, how do you turn, I generated, I don't know, 70 or 80 million or 90 million dollars from $20,000 over 18 years, right? And the weird part is that if it wasn't for all those gains being short term and me paying taxes every year, like on all those gains, and me pulling so much money, I pulled almost all my profits out every year to invest in startups and private companies. If I would have just left all that money in my brokerage account and maintained those returns, that 20,000 today would be like $1 billion at least. I think. So, but you asked how do you do that? I did that from roughly 75 trades I have over 8 years to borrow a trade. To this trade. Oh, Elf. I just talked about Elf. My first Elf trade was when Jeffree Star was a beauty influencer, did a YouTube video talking about their Elf putty primer, which is a $7 putty primer. I know you guys don't know what primer is, but
It's
putty
like
primer.
liquid.
Yeah. So
We put on first, right?
yeah. So Elf was this really junky brand that they only sold in drugstores, pharmacies, CVS, and Walgreens, right? It was a junky brand. And Jeffree Star comes out, does a video and says, this $7 putty primer is as good as this $50 putty primer. And he did this whole video. You know how many views it got? 12 million views. So you know what I did? I went to the Walgreens by my house, and I just stood there, right there by the putty primer, by the Elf. I just stood there. And all day long, moms came in and girls came in. And they just got, oh, well, why are you here? We saw the Jeffree Star video. Oh, cool. And I watched. They didn't just buy the putty primer. They bought the putty primer, and then they would maybe get one or two other things from Elf. Because all of a sudden now, Elf is like a cool brand because Jeffree Star said it was cool. So I actually went out, and I found the Wall Street analysts that covered Elf and Cosmetics brands for one of the big four banks. And I called them up on the phone, just randomly. I'm like, hey, I know you covered the sector. I just want to ask you, have you seen the Jeffree Star video? It's like, who's Jeffree Star? I'm not the phone. That's all I needed to know, right? It was like Wall Street, they don't watch YouTube. Right? These guys, these sell-side analysts at Goldman and B of A, they're not watching Jeffree Star makeup videos on YouTube. I am. That's where I get my alpha. Okay. So that's how you do it. That's how you do it. So Elf was $7 a share. $7 a share. And I went all in on Elf. And unfortunately, I exited most of my Elf at about 14. They almost doubled pretty much in like a few months. And the funniest part about it was that on the earnings call, they called out the Elf primer putty. It was the primer putty, whatever. I was like, man, it's so cool and that's what I call the point of information dissemination. So I invest at a point of what I call information imbalance. When you have information that the rest of the world doesn't have, at the point of information parity, when that information has been disseminated amongst other investors in Wall Street, sometimes that could be through an earnings call. Sometimes it could be because an analyst did finally pick it up, or sometimes it's because the credit card data starts showing big charges. And then Wall Street picks it up and they start trading it. Have you ever noticed that stocks sometimes move like a week or two before earnings? That's the credit card data that Wall Street's trading. So I actually spend six figures on data every year. So I've spent hundreds of thousands of dollars to buy institutional data, the same data that everyone's buying. But I don't buy it to trade off of it. I buy it so I can see when they're seeing what I saw earlier, and that's when I know that the information I saw is now being reflected in their data. So my window is closing, that's when I exit. Does that make sense?
It does. How long, if someone wants to do some sort of social arbitrage investing, should they research something before they actually make a move?
So I sometimes the top of the funnel where I just like find something on TikTok.
The discovery.
The discovery is very exciting because you find it and you're like, wow. Once you discover something, then you have to vet it. You have to make sure that it's real. So I will look at Google Trend data to see are people searching for that thing. I will look at WebStats data. I will go to the stores where they sell that product and start talking to clerks and verify, hey, how me show me your hottest product, and see if they're just going to tell me the thing I think they're going to tell me, right?
And
And
on
so
that real quick, did they ever ask you like why? And you tell, oh, I want to make an investment.
yeah, so what I try not to lie. I'm not like comfortable lying to people. So I tell them that I'm doing research. I'm just doing research. Like I do trend research. I'm like, hey, I'm a trend researcher, which is true for my investment.
But that's never led into a conversation of them being like, maybe I should invest.
No.
If they do it.
No.
I'm just saying that would be
These are clerks. Do you remember when Under Armour started making their what do you call their undershirt?
the tiger thing.
Yeah. That was like 7, 8, 9, 8 years ago. Cold gear. Remember the cold gear? Under Armour was making cold gear. That first winter that they were making cold gear, it happened to be a really cold winter, and I went to the Under Armour stores because I had seen that people were talking about this everywhere. I went to the Under Armour stores and the outlet stores, and I'll never forget it. I asked the guy at the store, I'm like, are people buying this, this cold gear? He's like, sir, he goes, we have never experienced anything like this in the history of the company. It is crazy. We cannot keep stock of it. We're manufacturing as much as we can make. I'm like, thank you very much. I remember coming out of that Under Armour store. I remember the outlet mall I was at and calling Jordan Dave on the phone and being like, dude, we are going all in on Under Armour. was like, the market was already closed. But I was like, tomorrow morning we were going all in on Under Armour. But like, so you want to like, when you get in a trade heavy, you want to leave nothing on the table. You want to make sure anything that you can investigate to like prove your thesis. I call it in my book. I call it you have a thesis. My thesis is that this thing is going to really benefit this company's quarter. That's the thesis, right? You have to prove out the thesis. So like anywhere where you can pull data, speak to people, interview people, like you can take all the data you can. And so what's really cool about having a community now, like when Dumb Money, like when I find something, like I'll just share it with them. Like, guys, I found this. Like, poke holes in my thesis, or help me prove my thesis. And now, like to be part of a community of investment nerds that think the way you do, first of all, it makes it more fun. So I'm not a loner. My whole life I've been a loner investor, like the weird investing kid. No one else invested like me. You have all these technical traders, you know the technical traders, they're like a class of their own. They all relate. I don't relate to them at all. Wall Street traders that are like fundamental traders that analyze spreadsheets, like they analyze that's boring as crap to me. I never want to do that. I don't relate to those guys at all. Reading comments on TikTok videos and looking for trends and connecting dots to the next big thing, that is freaking fun as hell. Like I would do this for free without making money. The fact that I'm able to make this much money doing this, like I'm watching TikTok videos. That's my job. It's just watching TikTok videos and reading comments. And it's pretty cool because you feel like a really deep connection to the world and culture because I'm reading literally thousands of comments a night. So I'm reading what all the youth is speaking about, like what everyone's speaking about, from every demographic, who you are, what you look like, where you live in the world. Like I have a really good sense that like how people are feeling, what they're doing, what they're liking, and it feels good to be that attached to the world. But it's like my profession. It's kind of
How do you know if you're late to something? Because you talking about this has got me running through my mind all the things that I'm thinking that I've noticed that people my age and younger are gravitating towards. And the one that really stood out to me, it's in the refrigerator over here. It's Fairlife protein shakes. And I'm like, my gosh, last year we have been obsessed with these Fairlife protein shakes. So good.
Like 5, 6 years.
But exactly. So I'm late to it. So that's
You were
really
definitely
big.
late to it. But also,
So,
when it comes to milk products, believe me, I've had numerous opportunities to trade. It's dairy. It's you can't trade dairy in the public markets right now. It's very difficult. I've had numerous opportunities to trade dairy. I've considered trading like commodities, like you just can't do it. So there's no way to trade that stuff.
Here's another one that I found interesting is that about 2 years ago, a year and a half ago, Macy's been a big fan of Starbucks. She stopped going to Starbucks.
Yeah,
and she complained that the prices were too high, and she instead started going to Dutch Bros. And Dutch Bros started popping up everywhere in Vegas, and they were paying a certain amount price per square foot for these little retail kiosk sort of places. And I was thinking to myself back then, I'm like, if she's doing this, not going to Starbucks, how many other people are from Dutch Bros?
Dude, you don't watch our show enough, right now. That's been a storyline on our show for years, Dutch Bros. And the Starbucks short, the great Starbucks short this year. That was one of my biggest trades of the year, the Starbucks short. Yeah,
So I'm on the right track.
You're absolutely
I'm
right.
2 years late.
Timing is everything. So you're organically seeing things in your life, and that's great. We live in a digital world now. What's really cool is that you don't know things are going to hit you a week late, a month late, a year late, 5 years late. But if you're proactively reading thousands of comments every day of your life, you're going to pick up on that stuff the second, right? And so I'm being proactive where you're being reactive. Which, by the way, there are a lot of opportunities to invest just by being reactive. Because a lot of times you'll see it first by chance. Because someone in your life could be Macy, just by chance you're seeing it quickly. But I don't want to take a chance. I want to see it quickly every time. But to answer your question, what you just asked is the hardest part of my process. Trying to discern the degree to which that information that you discovered is already well known by the investing public is a little bit of an art and a science. So what you do is you have to leave the real world and go into the investment world, where people talk about stocks on stock boards and seeking alpha and analyst reports and news stories. And anywhere where someone is talking about that stock, you read everything. You read every quarterly report going back multiple quarters. You want to see if there's any mention about that thing as part of your thesis. So if your thesis is that Starbucks is becoming too expensive and therefore people are not going to Starbucks anymore and they're switching brands, to what degree are investors aware of that? Are they talking about that? And are they deciding to sell their Starbucks or short it because of that? To what degree do sell-side analysts talk about that in the reports? To what degree has the company admitted that? So it's not a black or white thing. There are a lot of gray areas, and it's the toughest part. Because people are like, oh, when do you sell? You sell when you get information parity. Well, how do you know? You don't know these things. You just kind of feel for it. Like, okay, I think people kind of know what I do, so I'm going to sell. Right? Once you know for sure that the world knows about this, you're out of the investment. And it doesn't matter if you made money, lost money, what the stock did. I only trade information. I don't trade stock price. I just trade information. So, like, Mike said, Mike, it might get into your, our eventual conversation about robots.
Let's talk about robots.
Yeah.
I tell you, you're
I love it because you know what? Like, there are all these small trades and they'll go on forever and I'll be doing them forever. big ones don't come around that often.
Okay.
And occasionally there's one that comes around once in a lifetime, I think. And this is it for me. Like, this is it. This is the biggest trade of my life. And it's the robot trade. It's, the fancy way to say robots or humanoids is embodied AI. It's the embodiment of artificial intelligence, right? And you probably heard Jensen at NVIDIA talk about it a lot the last 6 to 9 months. You hear Elon talking about it a lot. I talk about it but I firmly believe that the embodiment of artificial intelligence is going to radically rebuild our world and change our economy unlike we've ever seen in our lifetime.
Start us off with why robots. Where did you first come up with the concept of robots are going to take over? This is going to be the next great wealth transfer, so to speak. That this is it.
It's just the biggest change to our life. And with that big of a change comes opportunity, right? 8 years ago, I was introduced to a couple kids that came out of the UT robotics program in Austin, and they were making exoskeletons for the Defense Department and for NASA. They were generating a ton of money, like $30 million of contract revenue, making basically Iron Man suits. I'm like, this is the coolest thing I've ever seen, and this would make for the dumbest investment of my life, so I'm not investing in it. I said no. But I kept up with them over the years, and every time I go to South by Southwest, I meet with these kids. They're really advancing their stuff, and then one day, they started making humanoid robots. And they pulled me aside, this was about 3 years ago, and they said, we are having a moment with humanoid robots, with actuator technology, which is the muscle of the bots, with sensor technology, and with whole body control, which is how the robot controls itself and walks and balances and articulates. And the founder of this company, Jeff Cardenas, said, Chris, within low single-digit years, I'm going to have a walking humanoid robot that is going to be able to function in a commercial and industrial setting and do physical labor at close to human speed. And I was like, you know that if you actually were to achieve that, it would be the biggest thing that was ever invented. I was like, I know, and it's going to happen. It's like, I guarantee you it's going to happen. Low single-digit years. I was like, well, you're probably crazy, but just in case you're not, I'm going to write you a check. And I wrote him a check, smallest check for me. And I kept up with them, and I was like, maybe I should research this stuff a little deeper. I started researching humanoid robots, the viability of them, the history of them, how real this was. And then Elon started talking about it. Elon's talking about this now. I think this is kind of interesting. And then I got a call a year ago from a venture investor that I had kind of educated on robots. He's like, did you hear about this company in San Francisco who's raising like $700 million backed by Microsoft and OpenAI making humanoids called Figure AI? I was like, not really, but he introduced me to the owner, and he did. And I ended up making a pretty large investment in that company. And then I also went back to Jeff. I said, Jeff, like, what's going on with your robot company? And I can't say anything too specific here tonight, but there's some big things happening with his company as well. And I ended up just started to like hang out with Jeff and like, look, how can I help? I want to be part of this. And now I'm like 300 hours deep in humanoid robotics research. I converse with humanoid engineers around the world. I talk to other investors that are invested in either Figure or Electronic or both. And we talk about this 7 days a week. Like, we're doing deep research. We're analyzing the technology. We're trying to assess how quickly it's going to be adopted by the world. Because we're investors in these companies, we have like insight that almost no one else in the world has from their CEOs that I can't speak about on the show because I'm under NDA from both companies. And all I can say is that what I have seen with my own eyes is unbelievably real, and this is happening. This is no longer like a 50% or 90% or 95%. It's like 100%. We are going to have humanoid robots that are going to be doing commercial physical labor that will be able to do any job on Earth before long. And we're going to have access to infinite labor in our world. Think about what it's like to have access to infinite physical labor. What would we build? What industries would evolve from that? How would that change our world? Imagine, there's 100 million people in the world who spend the bulk of their prime years when they should be getting married, having kids, having a joyous life. They spend those years taking care of a parent or grandparent. Not often in our world, but in most of the world, that's common. That's insane. It's actually insane. Could you imagine spending the bulk of your prime years just wiping the butt of your granddad? Well, that's a story that Jeff tells about his grandparents, and that's one of the inspirations of why he started Apptronik, and for 10 years he's been trying to build this humanoid robot. And we have a few of these humanoid companies around the world, not many, a few that are truly real and commercial and scalable, that are going to be, I think, become some of the largest companies on Earth, and right now they're very small, except for one, Tesla, right? And so Tesla's not small, but the funny thing about Tesla is all the exciting stuff happening at Tesla right now, hardly anyone's paying attention to the only thing that matters at Tesla, which is the humanoid division, Optimus division. So I put out a tweet thread back in January this year, almost a full year ago. And it was a 15-part tweet thread, and no one was talking about humanoids. And it was how the Optimus division of Tesla by 2030 could be valued at $10 trillion, based on them only producing 1.5 million robots at $100,000 a year lease rate, which is going to be the going rate for commercial robots. Yeah. So commercial robots will be leased to the world. So they won't be, you can't buy them. These are robots that you'll see in factories, robots that you'll see in warehousing and logistics facilities all around the world. There's demand for tens and tens of millions of these robots. And it's not because these companies want to displace humans. None of them do. These companies simply want to grow. They simply do not have the physical labor they need to grow. So these robots will allow them to grow. So depending upon who you believe, we have somewhere between a 50 million and 350 million human labor shortage by 2030 for physical labor. So we need 50 to 350 million human physical laborers, and we're just not getting them. If you talk to these companies around the world, they cannot find young people to do these jobs that older people are doing physical labor, laying foundation, all this stuff. So the demand is through the roof. But forget about the demand. I mean, imagine having infinite physical labor on Earth. What can we build? What can we do? Like, how would our lives change? Imagine every human, as you got older, you had someone to take care of you, right? To help you get up, get out of bed, get to the bathroom, someone to take the trash out. It would allow you to live a more productive, humane life in your older years. It would dramatically increase the quality of life for almost every human on Earth.
This, to me, seems like it would drive down the cost eventually, just about everything. Like, let's say building a house is an example. When you remove the labor component and you're able to employ these robots that work 24/7, perfect, without making any mistakes, the cost of these things should go down as companies' profit margins increase.
So there's one problem with these,
Yeah.
and there's a paradox, and I don't have a name off the top of my head. It was related to coal. And the concept was the more coal that we were able to find back in the day, when coal was the energy everyone used, the cheaper coal would become, right? Because you had unreal amounts of coal, and it would be really cheap. You know what happened as we started to discover more coal?
Use more coal, right?
Using more coal. So maybe the things that you're thinking of today, the style of house that people like living globally will get cheaper, but what we will demand out of the world will go up. So the same way that we live in mini mansions now that never existed 25, 30 years ago, that's become common now. People expect that now. No one ever expected that now. We all grew up in like 1500s sort of houses, right? So what we might expect around like 20 or 30 years might look very different from what we expect today. And so
Did you have dinner yet? No. I had probably breakfast.
But if our expectations on life climb that high, we start to enter an age of abundance where everybody wants all this stuff, right? Whatever it is, everybody wants a humanoid. Nobody wants to cook anymore. No one wants to clean their house anymore. The humanoid does everything for you. Everybody wants this and that. It might radically change the economics of your thesis. So it's like we can't really visualize that.
But really quick, I just want to mention something to you guys, that if you run a small business, you know that managing things like payroll, benefits, and taxes can seem like a full-time job. It's an absolute hassle. But with today's sponsor, Gusto, who, by the way, I've been using them for years and absolutely love them, it doesn't have to be that way. For those unaware, Gusto is the all-in-one payroll, benefits, and HR solution built for small businesses like yours. With Gusto, payday is a breeze. No more manual calculations or tax headaches. And with automatic tax filings in all 50 states, you can save hours every single month. Plus, Gusto offers health insurance, 401k plans, time tracking, and even access to certified HR experts all in one place, so you can focus on doing what you love, which is growing your business.
So join over 300,000 small businesses that are already using Gusto and see why it's rated G2's #1 payroll product.
And here's the best part, you can try it free for 3 months.
Seriously guys, this is kind of like a full circle moment for me because when I first started working for Graham, I originally created my S-Corp. And guess what I used? I used none other than Gusto. I've continued using them this entire time because they are seriously that good. Go to gusto.com/ice to get started today. That is gusto.com/ice or click the link down below in the description.
Thank you, Gusto, for sponsoring today's episode, because genuinely, I have used their platform for years. I absolutely love it. I don't know anywhere else. I would highly recommend them. Thank you again. It is so cool to have them as a sponsor. And now, let's get back to the episode. You know the feeling when you're working out, your earbuds just keep falling out as you're leaning over, or if you're on an airplane, but your current headphones just aren't cutting it? Yeah, same. That's why I've been recently loving the Raycon Everyday Earbuds, the sponsor of today's video.
Honestly, they've just been a total game changer for me. Sound quality is amazing, they're super comfortable, and they actually stay in your ears even when you're moving around. And I'm not gonna lie, I have some weirdly shaped ears because earphones have never fit in my ears, but the Raycons actually do. Plus, they've got features like active noise canceling and a 32-hour battery life. They're perfect for literally anything.
And of course, my favorite part is that they're affordable. Like, they've got all the same features as the expensive ones, except they start at half the price. You can't beat it.
And if you're like me, you opted for Get to charge your electronics, no sweat, because with the quick charge feature, 10 minutes of charging gives you 90 minutes of listening time.
I got the green headphones with the concrete case. Jack got the black headphones with the sunset case. And you can get whichever one fits your style the best at a discount. All you have to do is go to buyraycon.com/ice for up to 20% off of your order. Again, it's buyraycon.com/ice for 20% off site-wide. Trust us, you're absolutely going to love it. Buyraycon.com/ice. Thank you so much, Raycon, for sponsoring this episode, and now let's get back to the podcast. What are the biggest misconceptions people have right now for humanoid robots? Do you think people are more in favor of this, or do you think they look at this and say, that's going to take my job? This is bad for society, we need to stop this.
I think almost all people will support it, but there will always be some that say that. I mean, the truth is there's never been a time in history where a technology that displaces human has not created more human jobs, not less. Because what will happen is once we have access to all this infinite physical labor, it's going to create tremendous demand for industries.
This Leafeon is super OP, man.
Do more companies, more sectors, more things in life, right? Maybe what we understand as work in 20 years Doesn't seem like work today, but it will be work in 20 years. We will all become entertainers. I don't know. But life will change, and we just cannot perceive how that life is going to change. So initially, people will be scared, like they always are. They were super scared back in the day when we had technology, right? For the first time, and it started calling more jobs. What happened? So many more jobs. And it was technology. No one
Final stretch. All got KO'd, man.
you should show someone 4 years ago. What do you do? It's a software job. It's something like, no, you don't actually work in 2024. But like, you get what I'm saying? So like, when we think about what a job looks like in 2045, we would laugh at that today.
Sure.
But in the future, they'll be like, this is a serious
That's so funny. Do you want to play on the same team? I think I'll probably play for one more and be done.
And only this type of technological
I'm in the rank mode.
will allow us to enter that future age, right? So I'm super excited because listen, my life is awesome, but most people in the world don't get to live my life. And you know, things like humanoid robots are going to solve so many problems for so much of the world that doesn't have access to the things that we have access to, the top 1% in the U.S.
Are there any downsides that you think of? Can you make an argument for the reasons this would be a problem?
I think there are a lot of downsides with AI that scare the hell out of me and everyone else. And I think they're super.
You gotta go eat. Okay,
That scares me
you
because
go
it's
eat.
very hard to control. Can't touch it, feel it. The embodiment of AI is way more controllable when it comes to laborers or robots that help us.
See you later.
Or that help us at work, or that help us build civilization. Where it gets a little bit scary is
See.
when you start taking those robots and doing things in the military with them, right? And you have, you know, battle bots, and you have the little things from Black Mirror that will attack your home, millions of robot bees. That scares the hell out of me. But I think the robot companies that I work with right now are all pretty adamant they're not going to be involved in any of that. So I think when you think about embodied artificial intelligence, you have different sectors. And the sector that I'm referring to, which are humanoid robots, to rebuild the earth in a way that benefits society and more people and humanity. It helps us in our homes, it helps the elderly, it helps in healthcare, right? I don't think anyone's going to have an issue with that. I think drones, all that stuff gets very scary very quickly. But I wouldn't want to merge those two worlds together because I know the CEOs of these companies, and they certainly are thinking about positive things, right? And only positive things for our world.
What is the current state of humanoid robot engineering? What companies are at the forefront of that, and kind of what is the product that they've been able to produce?
So there's 3 in the U.S. There's Tesla with Optimus, there's Figure AI in San Francisco, and there's Apptronik in Austin. Apptronik has been mostly fly under the radar, I think on purpose, but I think we're going to hear a lot more about Apptronik in the next year. There is Boston Dynamics, which is owned by Hyundai. They actually made an experimental robot for 10 years. It's the one that we all saw videos of. I mean, it's really cool. Yeah. Well, the dog, but also the big ones that do the flips and stuff.
Oh yeah.
The problem is that's an experimental robot that has, hydraulic actuators that cost like $1 million. It's not a commercially viable robot that you could put in a factory or you can put in a warehouse to move boxes. Do you know how many boxes are moved a year from unemployed? What would you guess? Just commercial boxes moved from trucks to warehouses.
Did you say the world or?
Globally.
I'm gonna say
2 trillion.
Yeah, so I did some talk on that and I'm pretty good at it. It could be off. But I estimated about 9 trillion boxes. I think there are some stats that support a number in that range. But just that alone, moving boxes. And by the way, no human on Earth should have to live their entire life moving sheet metal from 2 feet behind them to 2 feet in front of them for 45 years. Lower back issues, their older years are horrible, right? Those jobs won't exist for 30 years. And that's a good thing. We need to take care of these people in the interim time. And by the way, like I said, no one's displacing these humans. Anytime in the next 10, 20, we need more physical, not displacing the ones we have. We need to keep the ones we have, but add more. The next generation can't want to do that work. But these bot companies right now, it would blow your mind how advanced they are. And how quickly they're moving. Like every month. It would literally dump your month. Like the things that I've seen, it's wild how quickly they're moving. And I haven't even seen everything yet. But they will be doing commercial work next year. There will be humanoid robots in 2025 in factory settings doing physical labor jobs next year. In small batches, there's a lot of learning, a lot of edge cases, right? So they'll be working in controlled settings. We're going to try to get them up to human speed, right? Because right now they're not fully at human speed. But I think people in this sector are adamant that they can get up to about 120 to 150% human speed eventually.
And they wouldn't have like 9 to 5 work hours.
Well, they'll be working 23 plus hours a day. So the batteries last about 4 hours. In some cases, they're hot swappable. In other cases, they're rechargeable. I mean, there's a lot of different approaches. Different companies are taking different approaches, and that part's not even that important. But they'll be able to work 23 hours a day. Yes.
Have robots hot swap the battery.
They will be. No, they will be. No, they will be. They 100%. That's already going to happen. But again, the humans, if any humans were to get this place, they're going to be doing better things that are probably making more money than they make currently. So, but this is happening, guys. It's not happening like right this second, but we're not talking about 10, 15 years away. You know, when Elon says something, I don't believe it, but it might be true. But I don't assume it's true. But all this talk that if you read between the lines, stuff Elon's been saying about humanoids, it's not fully true. It's kind of
Kind of reminds me of like in the 1940s and 50s how having like a TV in your house was like a rich person thing, and then maybe they call it the internet, having a computer in your house was like a big thing in the 90s, in the early 90s. Like you go to grandma's house, she didn't have a computer. Now they're common, everyone has one. That a robot could be like a rich person thing.
initially, yes, but eventually everyone.
50 years from now, it's like commonplace. Every house has one of those like little robot workers cleaning, cooking, laundry, housekeeping, gardening.
Ask a mom about this. Right? I mean, you ask any mom if you had a bot in your house that would literally just go around picking up stuff. It did nothing else. She'd be like, sold. It picks up stuff, sold. It also does your dishes. It also does your laundry. It also does your closet. And when it turns from spring to fall, it redoes your closet based on the fall stuff. It can all the spring stuff fold up, put it away. It knows what you like. It knows how you like things, right? We're talking about generalized autonomous robotics. We're talking about robots, guys. This is not decades away where you will be able to speak to the bot using large language models. It will interpret what you said. It will learn on the fly and do whatever you need to have done.
Are relationships going to be obsolete? Are people going to choose to have relationships with robots?
I think the thing that threatens relationships more than anything else is not so much the robots, but the artificial intelligence bots that are companion bots, that are more digital. I don't necessarily know that the human, like the robot form, eventually, maybe, but like my mind's not there. That's kind of crazy. Yeah, eventually, yes.
It's going to be
But
instinctual.
what is wild is if you were to study what's happening right now with companion bots, meaning artificial intelligence, not physical bots, but just AI companion bots, it is some of the stickiest technology we've ever seen in our lifetime. It is so sticky. Once people start using those companion bots to converse,
I've seen news stories of like young men falling in love with these bots
it's happening.
all the time. There's one that's like
Humans
Game of
are
Thrones
bad,
bot.
man.
They like remember that and like told the like I guess the guy was a little mentally unstable, had his own issues, but like was deep in this bot, like having conversations as though it's a real person, taking everything to her.
I know this. That's happening. That will happen. I don't think I like it. I do like some of the mental health stuff because anyone could have access theoretically to the best psychologist, right? Who gets to know you and understand you. Again, these are things that the top 1%. We all have access to it. Most people don't. To have access to like state of the art, the best psychology, right? The best custom for you. Education is going to be radically reformed,
Physical
right?
health, I think it would be crazy.
Physical health, right?
Yeah.
How about having a bot trainer at home? Have you ever trained like
You have-
physical therapist?
But I'm saying this is the epitome of population decline because someone doesn't need to go out and be social. They don't need to meet anybody. They can have one robot that serves every single purpose: a friend, a companion, a lover, a psychiatrist, a doctor, a personal trainer. You download whatever you want to. They're everything you want. You don't want to talk to them. You tell them away.
That's a deep dark wormhole. I will tell you this. I'm older than you guys. I grew up in the 80s and 90s. And you know how people say, oh, they look at videos of people when they went to parties and they were interacting and engaging and what it was like. I'm going to tell you right now, it really wasn't that good. Like, it really, like, it's no bullshit. Like, well, I reminisce, I talk to my friends all the time. I'm like, do you realize how lucky we were that we got to be in high school in the late 80s, early 90s? And we're all like, dude, it was incredible. Like, no phones, no anything, no record making. People all talk to each other. We would engage.
How we in the
with our
lead,
humans
man.
all the time. Like, you were constantly just looking in the eyes of your friends and just engaging and hanging out and having moments all the time. There was never a phone. It didn't exist. I do agree with you. It scares the hell out of me because it's not an exaggeration that that time period was so special. It was phenomenal. It was great. I was anything about it. I even say, like, I hope that the metaverse can replicate that world so I can just go back and relive some of it. Because, like, it was really that good. And I have massive concern about, like, the way that this is messing with our heads right now. Like, no one's had more mess with me. I told you, I spent hours a night on TikTok for my career, profession. And it has rewired my brain to where I can no longer watch a movie anymore. I can't sit down and watch a
You know
TV
that? I
show.
started watching Netflix, 2x speed. They offer a feature
Yeah,
too.
I would do that.
Because I'm like,
I would do that.
slow. Like, I'm so attuned to YouTube algorithms where I'm like,
Sickness.
there's a pause for a few seconds. I'm like, skip. That's it.
What is Macy like about it?
I don't do that with Macy. But if I'm like traveling on a plane or something like that, or I'll just put it on.
I force myself now. I say, hey, this show's great. I know it's great. I'm taking my phone. I'm not.
Oh, yeah,
I'm
by the
watch
way.
this. And it's so slow. And it's like I'm like I can't. I don't do this. My brain is gonna get so warped. And it's like I know what it's like to be a 15-year-old. Like it's horrible, guys. It's like it's horrible.
But you hear stories of people like they're getting married later, they're having kids later, they're having their first intimate experiences later in life. They're more but I think all of that's a reflection of just people are glued to their phones, not having social interaction.
It's more than that. It's more than that. So I think about this all the time. Because I have kids that are 14, twins. They're too small. They know too much. So if you look at relationship on top, everything you would ever want to know about the opposite sex, about how to engage, like they know too much, and then they get angry and expectations get high. Like there's so much information, people talking about relationships. We were so dumb 25 years ago. You were just like, when you were kind of ready to get married or whatever, whoever was in front of you, you were kind of attracted to. I'm not talking about you. Like I got lucky. I got very lucky. But a lot of people, like from my generation and older, was like, oh, like she was at my job and worked at the cubicle next to me and was kind of pretty, and like that's how people ended up marrying people. Now I got super lucky, but most people, that you were just dumb and you were forced to do that. And you know what? It benefited you because you ended up not overthinking anything. Okay? You just like you made it work. Yeah, well you didn't look for the perfect person. You didn't have these lists like have you seen these like TikToks where it's like the 800 icks that a girl gets? Like it's like it gets to a point where it's like, dude, like no one's ever gonna be happy with a mate anymore because you're looking for all these things.
Right, but my point is you see that and then you can program AI or a robot to be perfect, but to be imperfect enough. It's like a slot machine where it doesn't give you a win every time, but it gives you a win one incentive, and enough that keeps you going and hooked. So the AI or the robot is not going to be perfect, but it's going to pull away just enough to make you want to chase it. I think it's going to be scary when it really understands human nature to be able to push back as much as needed to give you rewards as much as you need to stay addicted to it.
I know it's going to be scary. I'm glad I'm just an investor. About that stuff. Because honestly, when I get down that wormhole, it's depressing. It's depressing for me because I see what's happening, and it's not good emotionally for people. And like lifestyle, like you're saying, no one, they're just staying single now. And I see so many people, like, as I read so many comments, the comments that I read more than anything else are like, I'm fine being single for the rest of my life. I see that all the time. Like, I'm happier alone. I'm happier alone. People are like, they've given up. They just don't even desire it. And that's what's messing with my head. Because you think about the dystopian future when the concept of a relationship, as we've known it throughout our human history, could that theoretically kind of go away when you could have children without being, you know what I'm saying? Like you look at the way we have children now, and with science, we can do that, I think, in 20 or 30 years without even doing any of the stuff anymore. So it's like, it's a really dystopian future, and I see it happening. I really do. I'm seeing it in commentator right now, and I kind of ignore it because it has nothing to do with investing, but I can't get away.
Where do you think that's coming from? Where's the frustration underneath all of it? It didn't seem like this was like 15 years ago. When I was in high school, none of that was a thing.
Because there's an echo chamber of people that are just as angry as you are, and you're able to converse with them or read their comments and read or watch their videos. There's millions of these videos that are like, women are terrible, guys are terrible, right? And then you just get in that echo chamber of, we're not going to hook up with guys anymore, or like, we're done with women, we don't need women, we don't need to be married, you get nothing from it, blah, 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 you know, like, hey, listen, a lot of the points that people are making are valid on both sides. Both sides are valid. That's the problem, is that intuitively, when you read this stuff, and you see these experiences that these people have had through marriage and relationships, you're like, I don't want that, forget about that. And that's why I say it was nice at the time when we were dumber, and we didn't overthink everything. And we just kind of did things that intuitively maybe don't make that much sense if you're overthinking them, but you end up having this really cool life that's dirty and messy, and maybe your relationship isn't perfect, and maybe kids is hard, they're not perfect, but like at the end of the day, like it's part of life. And like I'm worried that we're overthinking everything because we have access to so much information and so much like engagement with each other, like exposing all these thoughts all the time.
I agree. I think we could be overthinking things because I run into the constant problem of having dogma in every direction. Same subject matter, two completely conflicting ideas about that subject matter. This is the truth. This is whether it comes to diet, whether it comes to dating, whether it comes to fashion, all of that stuff. And everyone has their own objectively correct opinion. And I also think there's maybe also a chance that we're not overthinking, but we're producing just numb humans. What do you think to the tune of people just spending whittling their time away on social media and not really having to ask themselves, what is the meaning of all of this? Because they can, I guess, find, escape solitude and just go on their phone and pass time.
It is, but there are benefits to it too. We can all find our niches now. It was very hard to do that in the past. Like I talked about Oni Buckicon and all these people, like they all have communities, and yeah, they end up consuming a lot, but a lot of what they consume is in their niche, in their passion, right? Whatever that is. It might not be relatable for me, but I do feel that people can people don't feel that they're an outcast anymore. The outcast is going away because there's a community for everyone, and you could find like-minded people, and you could hang out with those people that are digital or consume their content. And then there's something joyous about consuming content, people that think like you, and you don't feel alone, right? In life, because there's a lot of people. So there are some positives. There's positives and negatives. I mean, listen, I get to ingest robot content all the time. I'm friends with all the robot YouTubers now, right? It's awesome. And we're all robot nerds, and I'm a hybrid investment nerd and a robot nerd, and bring those worlds together. By the way, getting back to the robot pieces, I think most Tesla investors are not invested in Tesla for the robot division. It hasn't even scratched the surface yet for Tesla investors.
People are seeing Elon Musk's timelines and that his inability to hit what he says and saying, okay, he's talking about robots that's probably going to 10 years from now. Let's not focus on that. He still hasn't even gotten this full self-driving. It's completely hands-off, external phone, or my computer, look back at the passenger and not having to keep my hands on the wheel.
Yeah, I love what you just said, because that is the biggest piece of information asymmetry ever. And I know he cried wolf so many times that now that he actually is on to the biggest thing that's ever happened, no one believes him. I love, I think about it all the time. I'm I was saying this a year and a half ago. I was no one is going to believe Elon and his humanoids because he already lost his reputation when it comes to timelines on autonomous driving. So no one's going to believe. And by the way, I'm not saying this is going to happen overnight either, but it's not decades away.
I think people were disappointed when they saw his humanoid experience. And humanoids were serving people alcohol, and it was obviously a comedian behind, speaking with people.
Yeah, it was teleoperated.
Yeah.
Which, by the way, in the robot community, there's nothing wrong with that. Teleoperation is the gold standard in how we train robots using artificial intelligence. So you teleoperate the robot, but every millisecond of that performance, of how the robot interacts with the human, what they do, the sensors in its fingers, the way that it walks, the way that it moves its arms, the reactions, that's all training an artificial intelligence model, so that in the future you could have those exact robots in that exact setting without being teleoperated. The only way that they're going to learn how to do that on their own is either to go through a teleoperated training data set or put it in a simulated data set like they have in NVIDIA. NVIDIA has robotic simulated data sets, but we have to train the robots. This is not an easy process, guys. Training robots to basically think like humans and act like humans and engage with the real world environment around them is not an easy thing. That's going to take years, but it will happen. It will happen, and eventually we'll have generalized autonomous robots that can do anything. You can drop 1,000 robots in a company, and the foreman could be I need you to do these tasks. And they'll be okay, can you show us how to do them so we know exactly how to do them? Yeah, my crew will show you how to do them for an hour, and then I want you to do them with the other 20 trucks. And they'll just go to work. That's going to be, you won't have to train them more than that.
How does Google's quantum chip fit into this? Is this a part of the equation where their chip could somehow power these way faster, make them way smarter, or are they two separate?
I think they're separate, but the concept of quantum computing is super interesting when you think about just generally how we're going to advance artificial intelligence over the next decade and a half. And the quicker we advance artificial intelligence and robots go hand in hand. Remember, this is called embodied AI. It's the embodiment of artificial intelligence. There's no doubt that quantum computing, once we start to commercialize it, will further advance artificial intelligence, not just to be generalized, but to be super artificial intelligence, right? So to have artificial intelligence that's actually smarter than humans. And when you combine that with autonomous robotics, you can really have wild things, right, on Earth. To me, what we can achieve with this is just wild. So as an investor, remember something, guys. I have never seen a point in my lifetime where we have pulled forward revenue as investors as aggressively as the last 4 years since the pandemic. So what I mean by that is when we have industries emerging, as soon as we start to see that this industry is developing and it's going to happen, we start to look at the revenue it will produce, like with NVIDIA, and we don't have to wait 10 years for that company to grow into the valuation anymore. That valuation gets sucked forward. which is kind of interesting as an investor. So you can catch something that's really large that has a large total addressable market. Like physical labor is about a third of global GDP today. And some people think that once we have infinite physical labor, that physical labor could be larger than our GDP today in 15 or 20 years. So this is the largest industry on Earth, theoretically. Not even theoretically, it is the largest industry on Earth. And if we crack the code, which we already have, it's just a matter of engineering, scaling this out now, Wall Street's going to catch on to it very quickly. And I think we're going to pull forward those revenue models. And what does it look like when you're printing millions, tens of millions, hundreds of millions of robots, and they're being leased out at these rates because the value of the bot is that big? You're going to have companies that are massively larger than today's company. That's why when I'm not like a Kathy Wood. I don't normally throw out big numbers like I threw out in January when I said Tesla could be a $10 trillion. Just their Optimus division could be $10 trillion by the end of 2030. I thought about that tweet thread a long time before I hit the button to send it out. I was like, no, I really believe this. I really believe that is real. And at the time, Tesla was like a $400 billion company, or 200. It was like at its low. I really believe that. And I think fast forward a couple of years, the concept of having these $10 trillion companies is not going to be that spectacular anymore, or that seem that obscene. But the TAM is huge. The total addressable market is gigantic.
How much does it affect it if the overall market right now is very expensive? When you look at it objectively, the market to PE ratio has only been this high in like the 1920s, 2000 bubble.
Yeah.
A lot of people do say that we're in a bubble now. The market is too expensive and that it's overvalued. How does that play into all of your thesis? Or is that even something to be concerned about?
Yeah, I mean, it's definitely possible. It's really, we're living in a very difficult time to assess what's coming in like 24 months, which is crazy. Like if you went back 15, 20 years ago, we can tell you exactly what's coming in 24 months. You can look at all the technologies and you can be like, there's no way this technology is going to grow more than this much in 2 years. Now, try to assess the next 24 months. Do you have a clue? I can't even imagine. Nobody knows what's going to happen in the next 24 months. So we're living in a period of time where technology and innovation are accelerating at such a rapid pace that it's become almost impossible to predict what our world is going to look like in just 2 years' time. So could we be in a bubble? Yeah, we could be, but we could also not even remotely be in a bubble when it comes to some of these new sectors like AI, robotics, right? If you think about the concentration of productivity, what happens to a company like Amazon if they have infinite physical labor? What happens to a company like that? You know, Amazon works off of very small margins. What happens if they can operate at meaningfully higher margins? Like, can you imagine? Like, Amazon could be 10 times the size it is today. So we could be in an overall bubble. There might be a lot of companies that get crushed because of this new world, that don't survive it. We did an episode on Dumb Money where it was like talking about all the SaaS companies, software companies. Like, will any of these survive? Could we see a day in like 10 years where all the big SaaS companies basically go away? Like DocuSign and Salesforce, and the list goes on and on. While a couple of these companies innovate with AI so aggressively that they become, valid companies in the future, the rest of them just go away, and all this gets wrapped up to a very small number of companies. Like, look at what's happened in the last 5 years. A small number of companies have assessed all the market cap. Mm-hmm. Does that continue, maybe? If so, maybe both things are right. Maybe we're in a bubble for a lot of companies, but for other companies, we're nowhere near where they're going to end up in like 10 years.
Where does Bitcoin fit into all of this? And what is your thought?
Man, Bitcoin is one of those things. I'm always a guy. It's like I'll never pretend to like know everything. And I've thought so much about Bitcoin over the past 10 years, and I always come to the same conclusion. I just don't know. I don't have any thesis on Bitcoin except for one. I mean, it's a strong thesis, and it has nothing to do with the viability of Bitcoin or whether it should be higher or lower, or whether it will actually be meaningful to our society over the next 20 years, or be completely irrelevant. My thesis revolves around the fact that the young generation does believe in crypto and Bitcoin. Period. Whether they should or shouldn't does not matter as an investor. They do. In my generation, we had gold bugs. I was actually sitting next to Steve Forbes a couple months ago at lunch, and I was making fun of gold bugs.
Wow.
I was so embarrassed, and we had a laugh. But I was like, and I told him, I was like, the gold bugs used to be weird people. You're a weird guy, dude. Like gold bugs have always been weird old guys. They're like with these, and they're like, inflation, blah blah blah. I was like, now it's not weird to be a Bitcoin guy. In fact, it's cool to be. It's generally accepted. In fact, the entire young generation are all crypto guys. They're not speaking every day, right? So you're gonna have what, 80 trillion, I've seen numbers as high as $115 trillion of wealth transferred over the next couple decades, 2.5 decades. As that wealth gets transferred over, it is undeniable that a decent portion of that younger generation is going to choose to have some portion of their portfolio either directly or manage it themselves, or their wealth manager is going to do it for them, who are also everyone's going to right the next generation. And now that we've institutionalized these products, I don't see how Bitcoin doesn't continue to massively grow just as a result of wealth transfer. Nothing else. Nothing else. That's my thesis. That's why I'm aggressively investing in Bitcoin. I'm still worried about the safety of Bitcoin, right? The security of it. Willows, like one example. It's not unsafe now. It's not unsecure now. But things are going to happen over the next 10 or 15 years to keep it a secure asset class. I'm also concerned about regulatory. But right now, the regulatory environment looks good. So unless that changes, that's not a concern for me. So right now, all I know is that every year, more young people are going to get wealthier. And more older people, like I say, are no longer going to be holding their wealth. Like they're going to, what old people do. They get older and then they go away. I mean, it's just the reality of our lives. And is that not the only piece that matters? Like, we don't have to overdo Bitcoin.
So how could somebody watching follow in your footsteps? Where would you recommend they start?
I mean, I have that old book. I think my publisher pays me a quarter or $1. It's out of print now. You can still buy it on Amazon. It's still a valid book. It's Laughing Wall Street. It's the name of the book. It's Justin. Obviously, we have Dumb Money Live. My Twitter account, Chris Camillo. But I've done so many podcasts like this. I've done so many interviews. If you want to go down this social arb kind of rabbit hole, there's a ton of content on social arb out there now. Honestly, my favorite is the chapter that Jack Schrager wrote about me on the Market Wizards, which is a book that's come out every 8 or 9 years about the top traders in the world. He wrote a 34-page chapter about my style of investing. In that chapter, he did a better job of explaining about you than I can explain myself at some point. He's just a better writer, I guess, than I am. So you can read about social arb trading, but at the end of the day, you just have to start, just do it. And here's my biggest thing I want to talk about. The biggest thing that separates those with a lot of wealth and those that don't have wealth is risk capital. People don't think they can afford to risk capital. That's just wrong. So like I turned in 3 years, I turned 20,000 to 2 million, that's 100 times your money. That's not everyone's able to do that. But you can do that over 20, 30 years. Definitely. But you can only do it if you are aggressively investing that money in things you really believe in.
What's the difference between that and gambling? That's where my mind
It's not, look, everything that we talked about, did it sound like gambling? Or did it sound like intuitively paying attention
I
to
think
the
there's a
world?
big difference between you, who I think is way smarter than me.
Not. I barely graduated high school. You gotta remember that. I told you that. Like, I'm not.
I think here's the difference, is that I think you look at it from a very logical standpoint, and most people do not go in with the passion that you do for finding those opportunities. Most people go in for the sole purpose of getting rich as quickly as possible, operating on fear.
Yeah.
And it's a fear of, I don't want to lose my money, or I'm in a fear of missing out on this, and I'm going to go and throw my money in that. Oh, no, it didn't work out. Or something's going on. Oh, I don't want to miss out on this.
All I can say is there are people that have been following my story now for like, I don't know, 12 years, following us on YouTube for 8 years. They're just regular people. Some of them are UPS drivers, some of them are dentists. Some of them are, homemakers. Every profession in my community, and I've watched them literally over the years go from being totally intimidated by investing or like doing all the stupid stuff to now just finding things in their everyday life that they're like, this is a big deal for this company, and putting a lot of money in. And they text me all the time, they DM me and shit. They're like, Chris, you're not gonna believe how much money I made this year. I literally, for the first time in my life, I made half as much money from my brokerage account than I made from my real job. I'm like, I know, I remember, I was there. And then 1 year you're gonna make more, and then you're like, how the hell did this happen? You were just a regular Joe, and like 12 years later, you're making hundreds of thousands of dollars a year from your portfolio. I know for a fact that and you and I are to do it. I've seen it not just from me. I've seen it among all these normal, regular, just normies that have done it. Watch YouTube. Don't watch the guys that are hawking stuff, but like actually watch people that talk about real things on YouTube. Watch me. Just do it. It's not hard. Read my book if you want. I mean, just do it. Just start investing. The thing is, you have to immerse yourself in this world. There's nothing more important, guys. There is nothing more important than being part of the investor class for one's financial life. It's not an option. It's not like, should I start investing? Oh, it's not a question. You better don't start investing right now. You better go get a Robinhood account, get whatever, right? Just start doing it. I promise you. Don't do anything stupid. Don't need coins, none of that stuff, right? Just invest in companies, live your life, start connecting dots, start looking for trends, start looking for like how is culture evolving? How is consumerism changing? Like we as normal people have our like feet in the real world in a way that people on Wall Street just don't. We see things before them. The market is rigged in our advantage. because we can see the world changing in a way that people that work on Wall Street just can't. They're reading data that's weeks and months old. We're seeing it evolve in real time. And just start doing it, make mistakes. There's a little money here and there, right? No big deal.
So what then do you separate the people that are successful at investing versus the people that fail at it?
You just have a long-term mindset. You have to know that you're not good. Have you ever been good at anything when you first started? Like, but at the end of the day, as long as you're putting money in the market and not doing crazy, weird stuff, I don't know how you. I literally don't know how you lose. Like if you're not doing weird, crazy stuff, I don't know how you really lose at this game. It's just a matter of how big you win. And the more you do it, the more aggressive you get, the more comfortable you get. You're like, you know what? I just made all that money because I saw that this Apple phone was going to be a big deal, and no one else realized it. And next time, I'm going to put more money in it. Next time, I'm going to have a free stock option. I'm going to learn how to do stock options. A little leverage, right? You're like, you have to bucket your money. That's the big thing. Nobody knows how to bucket your money. If every individual on Earth needs to have a big money account where they take money that is not for retirement, not for vacations, not for education, take money that they ordinarily would have blown on something random, right? And say, you know what, is it worth me putting a $2 coupon? Maybe not. But if you look at every dollar like $100, if that $2 coupon is $200, is it worth putting out? See, I think of every dollar like $100. So I know I can take that dollar, invest it aggressively like rich people do, and grow it 100x over some period of time. If you think like that, all of a sudden you find yourself putting coupons. All of a sudden you find yourself mowing your own grass because you're going to take that money that you save by mowing your own grass and you're going to put it in that big money account. Not your normal brokerage account, but in an account where you get to invest like wealthy people, not worrying about losing, right? Maybe there's a startup. Maybe there's a guy from your college or from your work who's really smart and doing ambitious things. Look for those people in your life. Are they starting a company? Go start hanging out at your local startup accelerator, listening to reviews. Like, there's people in life, they're out there doing crazy things, right? They're just working harder than everyone else. They're taking big risks, they're starting companies. Every major city has like an incubator where you can go listen to founders talk, and you can start meeting entrepreneurs. Just like meet them. Just maybe you start investing in startups. Hit one startup, that would be $200 money, right? Yeah. But that's a world that anybody can be in if they want to be in. You don't have to be wealthy to be in that world. You don't have to invest. You can just start hanging out with those people and speaking to them. Meanwhile, you're mowing your own lawn, you're flipping coupons. And instead of, I always say like, hey, you want to buy that $800 TV? Will you wait a year and instead of $800, I guarantee that TV is $600. Like, $200. I'd rather have the TV this whole year. But what if that $200 is $20K? Would you wait a year? Well, I'd wait a year for $20K. All of a sudden, you're going to start delaying purchases to save a little bit of money. So all the stuff that you talk about doing becomes a lot more interesting. Like, a lot of people might look at the stuff that you do and be like, Rand's too frugal for me. I'm just not doing it. I don't care about saving a buck here or there. But if every one of those dollars is $100, all of a sudden, they start doing all the stuff that you say to do. You know how you have all those YouTube accounts of people talking about how to save money in a million different ways? That all of a sudden becomes really appealing if every one of those dollars is $100. And so if you take that money, I call it other people's money. It's money that was never yours. You were going to spend it, or you're going to give it to someone else, but you made a decision to get your hair cut every 4 weeks or 5 weeks instead of every 3 weeks. Save a little bit of money there, but that money goes in a big money account. And that money you use to aggressively invest. You're not like investing in the S&P 500. You're investing in individual stocks, maybe a little controversial. Maybe you invest in leverage. Maybe you invest on margin. Maybe you buy on maybe.
Your mom's got it. Tell me more. But here's the thing. How can I borrow you more?
But here's the thing. If you're borrowing money that's part of your retirement account, maybe that's a problem. If you're borrowing money that's in an account that's designed to be high risk, high reward, right? I have that account. Like, everyone should have that account, even if it starts with only $5 in it. Because it's shocking how quickly that account can grow over time. Shocking. Believe me, I've seen it. Not in my own account, but like in all these other accounts of people in my community. And like, I don't do coach, I don't generate, I don't generate any money from my community. I don't do any of that stuff. Like, I don't sell a single thing to anyone. I'm just like, dude, I'll tell you what I'm investing in. If you share your ideas with me, I'll share them with you. And by the way, I made more money from YouTube. People don't realize this. I've made more money from YouTube than almost any YouTuber, but I made no money from YouTube advertising or sponsorship. I've never taken a sponsorship. But the ideas that I get from my community on stocks, I probably make $40 million from. So it's like, I extract value out of the ideas that people that watch our channel comment. That sounds kind of weird, right? But like, the community is what I'm playing off of for ideas.
Honestly, your enthusiasm gets me so pumped up. Like, we're filming this right now, it's midnight.
I know.
It's midnight
I'm ready to
Monday,
off into the camera.
on a Monday night, and I'm like pumped right now.
Wait till you see the robots, man. When you see the robots, you are really gonna get jacked. No, I want everybody. If there was one word of advice I'd have for you right now, it's do your homework on robots. Do your homework on humanoids. Just do your homework. Watch the videos. Just do your homework. Go out. Don't listen to me. Spend 30 hours just researching humanoid bots. And watch the channels. There are a few really cool like YouTube channels that are tracking this stuff. Watch them so that you're mentally prepared if and when you choose to make an investment, whether it's Tesla or humanoids or some other company. Like,
yeah, if you do us a favor, you send me the best resources that someone could look at for humanoid robots, and we'll link them in the description. Michael Saylor gave us a whole bunch of resources that people could look at for Bitcoin, and he listed them out, like, go this and this and this and this, watch this video. We'll link to that in the description and make it easy on someone. If they want to learn, tell us the best resources that the average person can just go read or watch or listen to.
done.
Something.
These guys are my friends. I'll listen for it. Yeah.
Here's how you balance doing all of this while also having a family and 2 kids.
Oh, it's easy because like you have to remember that this is what I trade on this. Like I don't have screens. I don't study finance. Like I just have fun with it, right? So it's like it's the easiest. Social arb trading is the easiest thing in the world to do because I can do it in the middle of the night, right? I told you after my kids go to bed at 10 is when I do most of my research, like 10 p.m. to 2 a.m. I'm not totally consumed. I don't read the Wall Street Journal. I don't watch CNBC. I'm not on stock boards and stuff like that. I don't trade. I don't care if the market's open or shut. I don't even check my account some days. People are like, blown away. Like there are days when I don't even check my account. In fact, one thing I suggest everyone does is try to go 3 days without checking your brokerage account. It is the greatest thing you'll ever do in life. Just go 3 days. Don't check it. You might be up, you might be down. You don't need to look at your stocks. You don't need to do it. Occasionally, you really don't need to do it. Like with my type of investing, there's nothing that's going to happen day in or day out when you do it.
How often do you check your brokerage account?
Multiple times a day. But in fairness, I wake up and it's my routine before I get out of bed. I buy stocks. I buy index. Basically, I buy 3 ETFs every morning in the same amounts, no matter what, before I get out of bed, and then I like to check them.
You're putting more money in equities, which is like the most genius thing anybody can do. Like if you just do that alone, in fact, we should do a whole episode sometime about triple leverage ETFs because we did an episode years ago on this, and we did a ton of research, and we have a really strong thesis on this that it might actually be the best investment.
It works when it works, and it doesn't when it doesn't. Because I've looked into the same things like a 2x, because technically the best investment over a 20-year time frame was like a 2 to 3x leveraged S&P 500, and then the drawdowns were significant, but the upside was massive. But my point being is that like, maybe there's a theory over the next 10 years if we see a stagnant market or a lost decade, where we see decade over decade minus 10% from where we are today, that's going to crush you.
Yes, that is true. That is true, but generally the concept is if you have a lost decade and you continue to contribute to over a time period, that when it eventually comes. So it's all about time. It's all about duration in your time duration, right?
Yeah.
And it's only right for people that have an ultra long time duration. And I think there's always going to be some level of risk reward, but if you have a designated bucket for that, you understand the tail risk involved with that, and your duration is really long, and you don't want to spend the time to stop it. There's something about that too. Look at the history of it. It's fascinating.
I can see that potentially making sense if someone's in their 20s, not planning to retire until 60s, and they're disciplined enough not to sell and to keep contributing no matter what. And like you said, basically to not check their account, which is like every month throwing whatever they do.
It's not a total portfolio of philosophy, right? It's not, you don't have your whole portfolio in that strategy, but there's something really interesting in it as a way to supercharge returns with a bucket of money. I'm kind of fascinated by it, and I'm also a true believer in just like the asset classes over the long term. There are some scenarios like Japan and Los Angeles would be there are risk factors. Anyway, but
I'm just ultra conservative. Like I still I buy treasuries, I have the tax immunity bonds, I incorporate everything.
But do you have, Graham? Do you have a high risk bucket?
No,
That's a problem.
I don't think so. I'm happy just like if I could just lock in 5% a year for the next 20 years, I'd be set. I'm so happy with that.
But you don't know the degree of happiness of having a high risk bucket. It's so fun. But it has to be bucketed. You have to be able to bucket it separately, so you have to develop a different mentality around what that bucket
For me, that's a big one. Yeah. So that I guess is my high risk bucket, but I see that as like a 20-year zero or it could be something. But I like the big ones, yes. Very easy to buy in.
Risk capital is magical. It's the one thing that I paid attention to my whole life. I look at all the wealthiest people in my network, and so many of them have done nothing but have risk capital. That's all they have.
Could that be survivorship bias?
Perhaps, yeah, and that's an important factor. But risk capital is almost a necessity to build great wealth over some reasonable period of time. And obviously, it's what you do, right? But if you don't even have it, it's like you're not even thinking. So I just think it's really important for people to find a way to have risk capital and to properly bucket that as risk capital and not intermingle the risk capital with other capital.
What percentage? Like if someone, let's say, hypothetically has $1 million, there's a net worth between a house, savings, 401k, investing, taxable, like what percentage of that should be allocated to risk capital, in your opinion?
Yeah, I don't think I would never answer a question generically because every individual is totally different, right? So it's like when you say $1 million, you can have a person, the answer should be 0 in that case. In other cases, it could be 50% because every person has a different level of a different objective in life, right? Like, I'll give you an example. Like, for me, I have a very strong objective to build $1 billion foundation for pediatric cancer, leukemia, and autism, right? And so for me, it makes sense for me to have a very large risk capital bucket because it's the only way I'm going to achieve that life goal. Another person, like Dave, for example, I tried to get Dave to put more money into one of our robot companies. I was like, I don't understand, Dave. You have all the same information that I have right now. Why are you not putting more money? And his answer like really threw me off. It made a lot of sense. He was like, I don't know what I would do with the money. He's like, why would I put more money at risk when I get no benefit from having the additional capital if what we think is going to happen happens? Like, I wouldn't do anything with that money. I have no objective for that extra money, so there's no reason for me to even do that. And I was like, it reminded me that we all have different like goals, and like that we all think differently. Like, he has zero need to build wealth beyond what he already has. He just wants to live his. I told you, he's not here. He's in Africa. You know, he's just having fun. He has a great life.
Happy, travels, wakes up, no kids, just sleep in every morning. It's just a very low-key, just nice, friendly.
Meanwhile, when he went up to Africa, I had to drive 4 boys to a Zach Bryan concert in Tulsa, which was a 5-hour drive in the rain last Friday night. Got 2 hours sleep because they kept me up all night throwing crocs in the room over my bed, and then at 6:30 in the morning drive them home because a couple of them had to. I know, right? But like that's the difference between my life and Dave's life. Like polar opposite. But you know what? I loved it, man. I loved it. It was ridiculous, but it was chaotic. I still not recovered from not having sleep that weekend. But
how do you make sure your kids don't grow up spoiled?
That's the one thing I think about more than anything else. Wealth destroys lives if it's not properly managed. I do not want to steal that from my kids. Like my greatest moments in life, I have a picture of me and my wife with our first washing machine and dryer. And I remember that like it was yesterday. We were so proud that we could afford to buy our own washer and dryer. We got it from like Costco. There was a photograph of it. And then like her parents got us a mini washer and dryer, like miniature thing that we put on the shelf. I was like, how stupid was that? But like we were so happy. Like buying that washer and dryer set was so happy. It's like there are so many kids that will never experience the joy of making a purchase like that because by the time they're like 18, like, what? Like, I just would have that, right? I was like, I never want to steal that joy from my kids. So I will never give them that. Honestly, like, that's my goal. So, like, now, I don't get to choose that because when you're married, you don't get to, like, unilaterally make choices. And so I have very strong opinions, but I'm only half of that decision, right? My wife, so, like, we haven't quite figured it all out, but the one thing I love that I think a lot of people don't appreciate are charitable foundations. So all these people have trust funds that are managed by attorneys, and you have to manage all this BS. Like, the magical thing about having a charitable foundation is you can grow it as large as you want. It will never go anywhere. It will always grow. It grows tax-free, which is super cool. And you're allowed to take a reasonable compensation for managing the foundation, for allocating 5% of that to get distributed every year, and for choosing, you know, what mutual funds it's in, right? And so you could allow your children to take over a charitable foundation that you set up. And they legally can only take a reasonable salary for the rest of their life and health insurance. Legally, if they ever take more than that, they can go to prison. So it's like this beautiful thing that exists that I think is a really good tool if you want to ensure that your kids are not going to go destitute, that they can have health insurance, that they can kind of take a reasonable salary, but probably not nearly enough that would keep them happy in life. And it's something that they don't have to do as a full-time job. They're still motivated to go out and build a life for themselves and build careers, to generate real money for themselves and learn how to invest, but they do have somewhat of like a backstop there, right? And my big issue, you guys, is that it's not like it used to be. I think the future generation of the haves and the have-nots are no longer kids that just worked really hard and got into really good careers. I hate to say this, I think the future generation of haves and have-nots are the ones that inherit the most. Because when you look, going back to that conversation about what, 80 trillion, now some people are saying 115 trillion, because inflation coming up. When you think about either getting a few $1 million or not getting a few $1 million, that's the difference between the next generation of kids that are either living this life or living this life. That kills me. It never used to be like that. Never. There were the kids that had like trust funds were like far and few between back in my day. Like I didn't even know anyone that had. I remember I met the first kid that had a trust fund when I went to SMU, right? But even then, there weren't that many kids at SMU, which was like one of the wealthiest schools in the country, that had hedge funds in my circle. Now, like I look at my neighbors, like in my neighborhood, which is a really nice neighborhood, and I like hear a lot of the parents talking about trust. Like, all your kids have trust funds? Like, what the fuck is going on? Like, is that like just normal now? And I'm starting to realize that like it's not even just a trust fund. Like the inheritances are insane. Like think about how many people are multi-millionaires now. Just regular people in Ohio, just through the appreciation of their house. Okay, so your parents either have a house that's worth 1.2 million, and you're going to get that value, or you don't. Like that could be the biggest differentiator for the next generation. It's very
I think
weird.
a lot of that's going to be sold for end of life care. Depending on how long people live, medical ailments, maybe not.
I don't think so. I mean, yes, some of it will be. Some of it will be. You're right. Some of it will be, but I'm not quite sure that much of it will be because we still have health insurance. Like there's still insurance, right? So that does take care of most end of life care. Maybe not as good as some people would like it to be. I think we're entering a new age of have and have-nots purely based on class system, based on the degree of inheritance you get when you're an LDS. I think about this all the time, and then the reason for that is I always had this thought that I'd be like 0, but like if I give them 0, I really like it's not like you used to. Because in my world, it's like you work hard, you get a good job, and you build your life slowly over time. That's the environment I grew up in. But what if that doesn't exist in 20 years? You know what I'm saying? Like, what if that doesn't exist? And like the majority of people in America are getting some level of inheritance, and that goes to religion. You know what I'm saying? Like, so you have to kind of factor all that stuff in, and it's a lot to think about when you become a parent. Because it's a big decision to make. You don't want to ruin your kids' lives by stealing joy from them, achieving things on their own. But if the world is changing, and like our economy is changing such that it's normalized, that everybody has a starting point that's here. Because we all started here. We literally start all ramen noodles, like, dude, my first apartment was like $400 something a month. Like, I literally didn't have a car for a while because it broke down. I couldn't fix it. I was taking buses to work. You know, like that's how it was in my day. Like, but that's just not how it is anymore. And as much as I hate that, that's just life. So you can't fight the truth. And so maybe there isn't a starting point that is a reasonable starting point that you should think about allowing or permitting your kids to start at that starting point. Is that inheritance? Is it a trust fund? Is it taking over a foundation where they can earn income? I'm still trying to, we're still trying to figure it out. We don't have the answer.
One thing I've found is that a lot of the parents that are wealthy that we have on the podcast, their kids turn out so well when the kids are working for the parents or under them, different jobs or careers, and the parents put them to work. Your children, you'd have them come up with their own investing strategies. Give them, hey, you get $1,000 because you helped me on this thing. You earned $1,000 from this. Figure out where to invest it. Let's do it together. Oh, you lost it. Where did you go wrong with that? How did you learn from that? Like Ben Mullis kid. Such a stand back into the working men
so
on
funny.
these farms, like being there with contractors. Or Grant Cardone's daughter, my daughter Sabrina. She's going and speaking at his gigs and like, doing sales calls. Like it's really impressive what he's kind of thrown her into this. She loves it.
They also seem to have a lot of interest in that.
Oh, that's true.
Okay, I was going to say that.
Yeah.
Guys, that's my dream. I would love to do my kids so much. You have no idea. Like I see my cars and I call. I was like, by the way, like I have an awesome relationship, but it's not that. Maybe they're 14, right? Maybe it's too early.
leave you on savage, man.
Like, if I push them too hard too early, they will.
I felt like I was pretty savage with that round.
Revolt against it, and so like I want them to come to me. If there's ever a point where I can engage with them like that. And so that's really interesting. You can believe anything I wanted it really bad. But listen, I also pushed them to watch Goonies when they were way too young, and they were like, they didn't love it. I'm like, oh, we pushed it up too young. I should have waited a couple more years. So like now I'm really careful to like let them live their life and let them like pursue what they want to pursue and let them come to me. And I would love to have that day.
They're probably the best trendsetters out there. Whatever they're into, chances are they can do it enough. Yeah.
Yeah.
Lastly, what is the secret to a healthy and happy marriage?
Oh wow, that's a tough one. And I think you're always still trying to figure it out. Like, I don't think anyone like ever has the ultimate answer. Like, I've been married for a long time, and I have a lot of friends who've been married a long time, a lot of divorces, and I feel like you're always just trying to figure it out. I would say what's really important is you have to find peace with yourself. You know, you have to find peace with yourself. I think you got to work more on yourself than your marriage. I think if people are working on themselves and they're happy, intuitively happy, and they have a sense of purpose, and they have like a positive, happy life for themselves, I think it makes it a lot easier for you to like come together in that way as a marriage. Because you could focus on all the relationship stuff, and that's important. But I think a lot of the core problems come from their internal problems that a lot of the people in marriage have, right? So you both have to support each other and like pursue your own thing, whatever that means. Like it's different for every single person, right? But a lot of the people I look at that have failed marriages, like I realize that like, they were not good place themselves. Like forget about the marriage, because you can never get in front of someone. You can get someone marriage and know what's happening, but the individual person was not in a good place.
Was it one or both of them?
It could be one. It could be one. I think you both have to be in a good place, right? So like if you have one person that's not in a good place, that could destroy everything. But I don't have all the answers, guys. That's like the hardest question. That is such a hard. Like I always like pride myself to say like to not pretend I know things that I don't know, and I honestly I still like in addition to my own relationship stuff, which we're always working on, it never ends. You're never like, hey, we're good in perpetuity forever. It's always like you're always working on it. I watch because I'm on TikTok so much. I watch a lot of relationship TikTok. Like a lot of TikTok and sexes, you know, a lot of male anti-female TikTok, a lot of female anti. I don't know what it is. I love watching it, and I'm just like, gosh, it's. I mean, there's just I don't know how to solve this problem. It's a huge problem right now.
Humanoid robots.
I think expectations. I think if I had to answer your question, keep your expectations reasonable for humans.
That's fair.
Just humans. I would say one thing I'm really good at is I have great relationships with my friends. Like going all the way back to high school. Like my wife she's like, I can't believe you're still so close with all of those friends from high school and college. They're like, some of them are so crazy. And some of them I'm like, you know what? I accept them. And I have reasonable expectations for my friends. Right? And a lot of times women will have expectations for their friends that are like here, that you never met. Like I think having reasonable expectations for your friends, for your spouse, for your kids, for your business associates, and not like expecting them to do things that are just unreasonable. Because like we're all different. You know? Like a lot of this conversation has been like, we don't all think the same, we don't all want the same things. I can't tell you what to do with $1 million because your million might have a very different objective from your million. Because you might want very different things from him. He might be like, hey, if I'm not a billionaire, I'm not happy. If I'm not on my way to become a billionaire, I'm not happy. You can be like, I don't even want that. So like you can't have the same financial plan. Everyone's financial plan needs to be totally different. One thing I do like for people in terms of financial plan, I only manage one person's money my whole life. It's my parents' money. And I love this concept of seeing Blood talk about it a little bit. And it was like Black Swan. It's this barbell theory of investing where you don't ever invest in anything that don't know you're lots of middle stuff. But like you literally only invest in two things. You invest at the opposite spectrum. So you have extreme risk assets, which are basically just growth equity, high growth equities. And then you have treasury, and nothing else in between. And then the concept is that everything that sits in between has a tail risk that the market underappreciates or doesn't fully acknowledge. Meaning there's always going to be some event that we can't anticipate that has the capacity to take down municipal bonds. We just haven't seen it yet. Right? There's some tail risk event that could take down everything in the middle. So why don't we invest the money that we need to be safe for the safest thing that we know exists?
Like a COVID.
Treasury. You know Treasury is going to generate this much interest, right? And then you invest the rest of your money in the world. And the world continuing to go on like it always has and growing, which would be growth assets, growth equity, right? Technology. And as long as we don't have some weird thing happen, that is going to continue to grow successfully. And then this is going to be a risk. The only decision you ever have to make is how much I put at this end of the barbell and how much I put at this end of the barbell. What I love about that, it's not good for me, but for people like my parents, they don't have to think about anything. The only thing they ever think about is 7/30, 60/40, 50/50, 40/60, and as you age, it becomes more, as your timeline gets smaller, maybe you shift more of it over here. Right? And it's like, it's the simplest money management, like wealth management strategy that nobody ever does. Nobody does this. Everybody overthinks everything, overcomplicates. How much do I have in bonds? How much do I have in this asset class? How much do I have in real estate? I'm like, What if you just stuck with the safest thing in the world and the least safest thing as a class, and just invested in those two things? And all you gotta do is configure your helmet to what you're saying. I love it for like a certain type of person.
Thank you so much.
Yeah, this has been
Tony Hawk, this has been
Tony Hawk. Thank
Well,
you so
Jeremy
much.
Piven.
Jeremy Piven. Thank you so much for coming on. I really appreciate
We're
it.
definitely gonna have to do a part 2 because I do want to talk about the leverage index funds. Absolutely.
So much, Jack.
They have white papers. You go
Yeah.
really,
We're
really
going to link to everything down below in the description along with where you can go as well.
This is fun.
And the resources that you said.
Yes.
Yeah,
Everything's going to be in the description. Thank you so much. Like, subscribe if you haven't done it already. And comment some.
So check this tweet out. Chris Corner goes, "My mind is officially blown. I got the $200 a month pro ChatGPT plan, and it had the operator, which is an AI agent, start a business for me while I watch. It messaged folks on Facebook Marketplace, logged their replies in a spreadsheet, and they responded. I recorded my screen the entire time. Must watch." So I invited Chris to do the exact same. He gives 3 examples of how to use Operator to start a business, do research for you, do cold email for you. You don't need to spend the $200 a month. Just watch this, and you're going to see the future. So we're going to use Operator today, and what are we going to do with Operator?
Okay, so I've got a couple plans, and I don't know if we get all of them, but I'm a pizza aficionado. I have an outdoor pizza oven. I cook double zero flour pizza with filtered water in my backyard at 900 degrees, and so I love it. And so I was thinking, okay, let's say I want to start a little side hustle, maybe some retail arbitrage, buy something on Facebook Marketplace, sell it on eBay. I need to find some price discrepancies. So I'm going to share my screen and show you what my prompt was. Alright, so my prompt was, I want to find a Cosmic Pizza oven in any market on Facebook Marketplace that is grossly undervalued when compared to the same model of pizza ovens listed for sale in any market. They need to be willing to ship to them. Go. So it was already logged into my Facebook account. I told it to start within 500 miles of Dallas, so it did. It changed it to my local area to Dallas. And then I gave it a spreadsheet, and I said, hey, here's a spreadsheet, and it's blank, and here it is. I said, go ahead and put some titles in there, and I want you to take note of the ones that look promising as you go. So it worked for 2 minutes, and it said,
I think it's true that now more than ever, there's more economic opportunity to make money. Do you think that Bitcoin's price is manipulated right now?
Probably, just because you see these insane swings.
Well, in 2025, there's another war for the soul of Bitcoin. There's a fight between 2 groups of people. One that's trying to say, is Bitcoin money, or is it a store of information? There's a lot of nuance to this debate, but in the end, I think this will determine the future of Bitcoin.
What would you say is the best investing advice you've heard?
I think like the most important investing quality of people that I've seen that have built wealth is like their ability to delay gratification. You eventually realize that the quickest way to being financially free isn't necessarily by building a bigger portfolio, but knowing what's going to happen next.
Are you bullish or bearish for the U.S. economy?
I think in the next few weeks, there's going to be a huge wealth transfer.
Bram Stefan, Andre Jeff, thanks so much for being on the iced coffee hour. Really appreciate it.
Thank you for having me. Vegas Brand here. I try to copy all your content. Thank you.
Huge fan of your channel, by the way.
I try to do exactly the same style videos as you, but slightly better on that.
You basically take my exact same videos, but then do them a day later with way better editing.
Yeah, I have ChatGPT sort of repurpose your script, and then I'll shuffle them in my own words.
It's working. You have now almost 3 million subscribers.
Thank you, thank you.
And no, in all seriousness, your videos are amazing. I mean, the amount of work that you put in your channel, the editing, I get really intimidated when I watch your videos because I'm like, how can I compete with like a movie quality video about either cryptocurrency or the US dollar or international affairs? And like, this must have taken you 3 days straight to edit this video, whereas I'm trying to like, slap something together in a few hours.
No, I appreciate it. It's funny because I'm trying to move away from the editing. I don't know if you're noticing it too, but I feel like the less edited it is, the more it's received. Like, I think people appreciate it more when it's less produced. I think YouTube's going back to that.
I've tried it a few times, and those videos have done really well, but I'm not sure if it's because of the lack of editing or because I saved the lack of editing for really substantial videos that stand on their own
That's a good
without
point.
editing.
That's a good point. And then every time you do them, I feel like the comments are like, Graham, you look tired.
It's always when I'm sitting in that chair, people say that, holding back, like, just light it.
I think it's a closer camera, so you look puffier and you just look bigger on the lens.
I love this conversation. We're able to talk here on the lens. Andre, thanks so much for coming on the Ice Coffee. I really appreciate it. Also, it's funny looking back, because I first saw you, I don't even know how many years ago, you were talking about your dividend stock portfolio and crypto. You were talking about crypto on YouTube a long time ago. I mean, 5 years ago, I think we had you on the show, and we were talking about Bitcoin when it was at like $20,000, which we all still thought we missed the train.
Right.
Do you think that we've missed the train on Bitcoin still?
No. Wasn't I like the second guest on your podcast?
You're one of the very first guests we've ever had.
I remember that. You gave me Pokemon cards. I got the psychic energy. I remember that. Now we're back.
Yeah.
No, that's crazy. I do remember that 20,000 was the peak of that cycle in 2017. Was it?
Yep.
Yeah.
No, we did again in 2020.
That's right.
Yeah.
No, it's crazy to see it over 100 now. What do you guys think? Do you think we peaked?
Michael Saylor would disagree. He said that we're just getting started here. I tend to agree. Also, we just had Robert Kiyosaki on the podcast, and that did instill a little bit of fear. He's like, fake money holding up like the dollar bill. He doesn't make sense. He's
kind of Bitcoin, right?
He loves Bitcoin, he loves gold, he loves silver, he loves assets when you can't just print more of them. And what's interesting,
We were talking about Bitcoin, and I said, are you still buying Bitcoin? And he said, no. And I said, well, give us a price target. How is it at 100,000? And he goes like this, I kid you not, implying that retail investors are being dragged along.
Oh.
He likes instead, he said, silver, gold, and Ethereum. And he's not buying Bitcoin at $100,000 levels,
Okay.
which is interesting. I thought he would continue to be buying Bitcoin, given his stance on the dollar.
Yeah, from what I see, silver and platinum outperforming gold outperforming Bitcoin this year for sure. Maybe he's right. I don't know. I think Bitcoin has a long way to go. I've always looked at Bitcoin's final price to be inflation divided by 21 million. And what's inflation? That's infinity, right? Like infinity divided by 21 million is infinity essentially. And it seems to be the fastest portion of the race, so I think it'll continue to go up. It might dip below 100,000 though, I wouldn't be surprised.
are you still buying Bitcoin right now?
Yeah, actually, last time I bought it was a couple weeks ago. I bought it at like 115,000. I just bought the IBIT ETF. I know that you've been buying it. Yeah, so I just bought the IBIT. But most of my Bitcoin is in the commodities, like the coin. I sell custody.
So you do the cold storage.
Yeah.
If you're going to do cold storage with Bitcoin, what's the best way of doing it?
There's just so many devices to do it. Get yourself a like a ledger or whatever else is not sponsored. You can get so many hardware devices, and then look into something called a 25th passphrase. It's sort of a plausible deniability wallet that allows you to create sort of a duplicate of your wallet. So if somebody like attacks you, you be like, okay, here's my C-phrase. But you have a secret wallet that's just one more word on that where your actual money is stored. It's called the plausible deniability wallet. It's actually really cool.
That's interesting. So,
Yeah.
for example, when those people like went over to Amaranth's house, and they were trying to like attack her and get her Bitcoin away from her, she could have just said, "Oh, I have this code," and then it like looks like it's hers, but in actuality, that's just like a fake code.
Correct, you could do that. I mean, at that point, like people always say, like the $5 wrench attack, like at that point, there's no amount of like cybersecurity you can be like, oh, here's, yeah, I mean, that was an unfortunate thing that happened to her.
So when did you first buy Bitcoin?
When did I first buy Bitcoin? I want to say 2014. When it was $600 a coin.
How much Bitcoin did you buy? Why did you buy it?
I bought like 6 of them. And I bought it because I was reading, it was like this magic internet money. And I remember reading about it when it was like $100, but there was no way of buying it unless you were super computer savvy. And then that's when, what chain was it? The,
Mt. Gox.
Mt. Gox, yeah. And I was like, okay, I don't understand any of that stuff. But I remember buying it, I think it was on Coinbase, bought 6 of them. And then, I just held on to it for a year, totally forgot about it. And I checked a year later, in like, 2015, and it dropped to $300 a coin. So I sold all 6 of them to buy myself a DJI drone. It was like the 1080p DJI, whatever it was at the time. And I eventually crashed that phone. But yeah, I sold it basically all of it.
So that drone was about $750,000.
Yeah. That was an expensive like learning mistake, but I feel like everyone has that story in Bitcoin.
I mean, I told Graham by Dogecoin was less than half of
He showed me this the other day. We could go back in the podcast. So Jeff told me to buy Dogecoin when it was a fraction of a penny for me to invest $1,000 into it in one of our first ever podcasts, and I did. I didn't understand it. I thought it was dumb. And so I had 217,000 Dogecoin for $1,000.
Wow.
I looked at it, and then the next day I sold it for a loss.
I sold it the next day. Paper hands. Paper hands.
It was so stupid.
What was it worth at the peak?
It would have been worth
125.
That's not as bad as me.
It would have been worth about $150,000. But for a $1,000 investment, which meant, and I told Jack this, I would have made more money from that single Dogecoin investment than I would have from the podcast at the time.
That's crazy.
So I put $100 in Dogecoin, which was about 0.4 cents.
Okay.
And then I held on a diamond hand for a very, very long time, up until the night of the SNL thing when Elon
That's
was
literally
literally
the top.
Yeah. And so I cashed out and then bought this exact Rolex with it. So we call this the Dogelex.
That's amazing.
Yeah.
I remember pleading with you. I was like, dude, look into Bitcoin. You gotta get some. And you're like, I don't know. You remember how opposed to Bitcoin you were? Not that long ago.
late 2016 or early 2017 when I made my first video about Bitcoin, and that was Bitcoin just hit $1,000. That's when I made my first video. You can go back on my channel.
You ever read the comments though?
All
It tastes like milk.
all the time. No, it tastes like milk. Dude, I wasn't for or against it. It was just I was neutral about it. And at the time, there was no real use case. It was just people speculating on it. Like it did not evolve back then to where it is today. It just is what it is. It was a gambling mechanism back then. Now people have a vision for it, but back then it didn't have utility or anything.
What changed your mind?
It hit 20,000. It hit 17,000 actually, and I bought one Bitcoin for fun, just to see what it was about because everyone was talking about Bitcoin. And I bought it, and then I started getting involved in all like the communities and reading through on Reddit and Twitter and crypto YouTube at the time in 2017. And I had fun with it, but back then I started like day trading it. So I would like buy at 17. I would sell it for like 17.2, I'd buy back in at 16.9. I just did that.
Right.
And I did it $500, and then I put all of that into a project called at the time Ryblox.
Huh.
And that turned into 50 or 60 grand, and I didn't cash out and I lost all of it.
Wow. Okay, so we all make mistakes. Yeah, that's good.
But that's what turned me on to Bitcoin. Right? And then I thought at that point, okay, there's no harm in just like investing 1% of my portfolio in Bitcoin.
Do you think that Bitcoin's price is manipulated right now?
Probably. Probably, just because you see these insane swings. Like all of a sudden I'll check the price at midnight, and then it drops from like 115 to 109 instantly. Somebody's selling. Who is that? How is that manipulated? And then all of a sudden it'll jump right back up to like 112.
There's this concept called rehypothecation. Have you guys heard of it? No, it's a mechanism to suppress Bitcoin's price, and it's probably happening on it. It's where a lender can essentially take the loan they give you and your collateral, and then they can use your collateral. Like for example, for like Andre, I want to borrow $100. I'm like, okay, here's $100. Okay, but in return, I'm gonna have a claim over your house. Whatever, that's the collateral. And then with that collateral that I owe you, I go to another bank and I'm like, hey, I got this dude's house. That's my collateral. I'm gonna borrow money against it. And then that lender goes and borrows against that. And then before you know it, it cascades, and now several people and several entities have a claim on the same asset. But now substitute house with Bitcoin. And now you can have 5 people essentially having a claim over the same coin. And I think that's happening with the ETFs to some degree or another. I don't think we'll know about it until later. But one way to solve that is to self-custody, and that's why I think self-custody is so important, because then you solve that. That's why I think like there could be a very violent price movement up.
And so, when did you then buy Bitcoin after this one instance of buying 6 coins, selling it to buy a drone that crashed? I just want to keep reminding you that. Because I feel bad because I lost a lot of money running the call option.
Were you going on Wall Street?
Yeah,
of course. Yeah. Sorry, ask that question again?
So when did you then next buy Bitcoin after that?
2017. That was during the block wars. I don't know if you guys were part of that or remember that at all. That's right now kind of like the biggest thing that's happening in 2025. So I'm not going to get like too into it, but in 2017, there was a fight for like the soul of Bitcoin, right? And that was called the block wars. Essentially, people were split into 2 factions. One half thought, well, what is Bitcoin? One half wanted it to be a currency, and the other half wanted it to be a store of value. So the currency people wanted the block size to be increased to like 4 megabytes, okay, right? It was originally like 1. And the store of value people were like, well, let's keep it at 1. Because if you allow Bitcoin to become a currency, which is a much higher TAM or total addressable market size, currencies are much bigger than a commodity like gold, right? It addresses a much bigger market. Okay, so if we allow Bitcoin to become a currency and increase the block size, then eventually, like let's say 5, 10 years ago, it'll be sort of to run your own node, to basically secure the Bitcoin. The only people that can do that will be like big mining companies and big corporations, right? And so you effectively centralize Bitcoin to big business. And big business is subject to what? Government control, right? So they're like, let's not make it a currency, let's make it a store of value. That was like my introduction to like the craziness of it. And I followed this whole battle. And at the time, the argument that made the most sense to me was to have like a currency. I'm like, well, if Bitcoin is growing at this point, it needs to be a bigger thing, like a currency, right?
In terms of currency, you're saying just something that you use to pay for
Yeah,
that.
it's like a dollar, exactly. Use it to pay and buy things. Because even in the Bitcoin white paper, it says a peer-to-peer currency, right? And so I was like, okay, so Bitcoin should increase block size. In retrospect, I'm glad that it stayed small, because then it means it's decentralized and anybody can run. It's pretty cheap to do. So that was the block size war in 2017. But fast forward to today, in 2025, there's another war for the soul of Bitcoin. Not a lot of people know this, it's like really nuanced and nerdy. I mean, I'm not the best person to explain this. I kind of did a lot of research yesterday. But essentially what's happening right now is there's a fight between, again, 2 groups of people. One that's trying to say, is Bitcoin money, right, a store of value? or is it a store of information, like all information, not just economic data, but all sorts of data, right? So there's a split between these two. Now, let me just ask you this question. What is the best way to destroy Bitcoin? If you were trying to take it down, destroy it, what is the best way? Unplug it from the That's one way. It's really hard to do that.
In all seriousness, I would say destroy Bitcoin, you have to destroy the faith of Bitcoin. So I think if starting a business is super exciting, but let's be real. On the business side of things, can be extremely overwhelming. You hear people say, just start an LLC. What does that actually mean? What forms do you? How do you make sure it's right? When we fired up with the sponsor of this podcast, because I've actually used it myself, and I got to say it was way easier than I could ever imagine. I don't know my LLC took less than 10 minutes. I actually do every single piece properly and professionally. It's actually so simple. This is how over 1 million people start their businesses. And making the entire process super simple. There's no confusing paperwork, there's no legal jargon, fill out a short form, and get handled us. Plus, they include your first year of registered fee service for free with every formation. The best part is that Disney doesn't just set you up to disappear, they've got the services you actually need to run your business at formation. So if you're ready to finally start that business idea you've been sitting on for way too long, guys, if you listen to anything, listen to this. Please just try. Do it. Even if you fail, it's worth it to give it a shot. So, you have an idea, a product or a service, why not go right now, maybe after this episode, do it, create a product, extremely easy at Disney.com/ICH, that is BIZE.com/ICH. Thank you so much to Disney for sponsoring this episode. Start the business. I would say destroy Bitcoin, you have to destroy the faith of Bitcoin. So I think if Satoshi somehow dumped on the market, everyone would lose faith in that. Or I think like a huge solar flare that somehow takes out networks.
Okay. Not bad. So we can't do Satoshi, right? Because like, he's gone. He's never coming back. And we can't invoke him to come back.
How do you know he's gone?
Because he would have come back at this point if he was like incentivized financially. Bitcoin's worth hundreds of billions of dollars. At no point in time is there a person like, I'm gonna wait. I have a couple $100 billion now. I'm gonna wait until it's a trillion or whatever it is.
And you can see wallets. That's how you know.
You can see it. Yeah, his coins have not moved since. I
It's
forget what
his
it is.
coins.
Yeah, it's in his wallet.
How many coins does he have?
Something like $1 million, roughly $1 million coins. Yeah.
So what's the value? It was like $128 billion.
Yeah, it's like one of
So,
the.
and you've never seen that is his wallet. Exactly.
It's never moved. And it never.
It hasn't moved since when? It was like
I
2000.
want to say 2011, but I might be wrong.
So are people speculating that he passed away? That he's gone?
Most likely not. Yeah. The people who think he was, but the Bitcoin doesn't attack that, right? Because if you figure out who that person is or who that group was, you can attack the character. It's a more
It's interesting. Michael Saylor's been asked, "Who is Satoshi Nakamoto?" And again, he just it triggers him. Like he does not want to answer it,
Right.
and he gets like visibly upset.
Yeah, he calls it the immaculate conception of Bitcoin, right? Because it's like no one else who gave birth to this thing. And it's hard. Like you shouldn't really try to figure that out. But the point is that the best way to really attack Bitcoin is not solar flare. We can't do solar flare. We can't get Satoshi's defense coins. The best way to do it is to destroy it from within. Okay. So right now in Bitcoin, there's 5 pillars of power that make it decentralized: users, nodes, businesses, the miners, and the developers. Okay. So like a lot of criticism that you hear people that don't understand Bitcoin is like, well, how do you know it's only 1 million? Like, what if they like write in the code and they change it to like 40 million just to give themselves some more? And it's like they could do that, but they wouldn't be able to get that through without the majority consensus, right? Like everyone would have to agree that it's in their economic interest to do that. That's what makes Bitcoin so cool, is the game theory aspect of it. So it's, the fundamental rules of Bitcoin have never been changed. But if you were like a rogue nation or a government and you wanted to destroy Bitcoin, you're like, hey, this Bitcoin thing looks cool, like, how would I control it? Well, I would figure out who the developers are, and then I offer them like a salary, like $20 or $30 million a year. And I would tell them, I want you to make certain propositions in the software that changes the core aspect of what Bitcoin is. And I would put out a huge propaganda campaign. It's like, what is Bitcoin? Is it really gold? Is it really digital gold? Is it really money? Or is it a database of all sorts of immutable information, right? So here's specifically what I'm talking about. This kind of gets nerdy. But there's a feature inside of Bitcoin called the op return feature, op_return. And that feature has an 80-byte limit, meaning like that's the storage capacity. It's very small. It's about the size of a tweet. Right? You can attach certain random points of data, like metadata or some kind of proof or some kind of message. Back in 2017, during block wars, the core development team, which runs the Bitcoin software, these guys are like the smartest, like nerdiest people, right? They do not like having a debate with people, so they shut people down, they censor people, and so the big bloggers, people who wanted Bitcoin to become a currency, they made a decentralized Twitter through this op-return mechanism. And the way it worked is you could send a fraction of Bitcoin from your own wallet back to your own wallet. So you send the money back to yourself. It cost you like a fraction of a penny. But in that transaction, you embedded a small tweet. And somebody made that into a website. It was like a decentralized, immutable.
into that
Into that data, yeah, like a text, a piece of text, basically. Right. And so they recreated a decentralized, immutable Twitter on the blockchain. That's how it was used. But again, it has that limit of 80 bytes. Actually, I brought a cool thing to show you what that looks like. So here is an image of an 80 byte size image. Can you tell what that is?
No.
You can't really tell what that is.
No, that looks like Trump.
It does kind of. I can see it. It's a suit, the blue suit, and then
Yeah, that is actually it. It is.
Wow.
Dude, you
I had no idea, actually.
But it's hard to see. It's really hard to see, right?
that was good. Yeah,
Good job, guys. Okay, so right now, the fundamental disconnect in the core development team is that they want to upgrade Bitcoin to remove the limit of the op return, right? They want to get rid of the 80 byte limit. What does that mean? That means that within a transaction, people will be able to include images and videos up to 4 megabytes in size. So now that image that looks like nothing to most people, unless you're an autist like Jack, that's the real image.
Wow.
Right? That's the Trump image. Okay, but that's like a good example.
What's the benefit of doing that?
Well, the benefit is now you can essentially have programmable money, right? Like you can have Bitcoin that's somewhat programmable. You can have NFTs on it. You can do a lot of like more advanced things. It is sort of
Oh
like
my
this.
god, can you
The Bitcoin community disagrees and they're like, this is the worst thing we can do. Because imagine, you're essentially bloating now the software and the whole ecosystem with BS, right? Like with images. And imagine if I was like a pizza file person, right? Wanted to send illegal images or videos to somebody. And they didn't want to be stopped, they didn't want to be censored. They can now use Bitcoin and attach an image or a video that's illegal to transmit into this transaction. Right? So if I were a government, I might want to regulate that. I might be like, hey, all these nodes that are handling all these transactions, you guys are transporting and transferring all these illegal images.
But here's the thing, wouldn't that all be on the blockchain? And then eventually, if that were ever to be cashed out, you could trace it.
Correct.
And so the person who cashes out 5 transactions down the line 10 years later, they're going to get caught.
It's not about who cashes out. It's about you transmitting things that are not necessarily something you agree with transmit. You have no control of this because they removed that limit.
Sure.
But there are arguments like, yeah, but it would be like NFTs on it. People like Michael Saylor, people like myself, investors are like, I'm buying Bitcoin because it's the best place to preserve my economic energy, right? It's like the best place for me to put my time. And I don't want Bitcoin to be graffitied over with data. Bitcoin is not meant to be non-economic data, purely for economic information, not NFTs and videos and pictures, right? So there's a big divide in the community right now. And the core development team, they're proposing that this change goes through. They want to get rid of this limit. People on the opposite side, people who oppose it, I don't think you know this, but it's the Knox development team, and this guy, I think his name's Luke Dash Jr.
Damn it.
He's like, let's just keep it as is. And a lot of investors are like, let's not change anything. Bitcoin's not broken, let's not upgrade it, let's not do anything. So the most likely outcome that will happen in October, this upgrade is going to happen in October, is that there will be no upgrade. So the nodes, the miners, they're not going to upgrade their software to software 30. They're going to keep it at 29. That's most likely what's going to happen. So only people like Michael Saylor really understand what's happening, but I think in the next few weeks, there's going to be a huge wealth transfer.
So from a 30,000 foot view, what is your strongest argument for Bitcoin and against Bitcoin?
What is the strongest argument for Bitcoin? Oh man.
If you were to pitch me,
Yeah.
I don't have very much Bitcoin.
Sure.
Maybe like 1% of my portfolio is Bitcoin, and my portfolio is not that big. But like actually, let me say,
It is actually really big.
It's 0.5% in Bitcoin, I think.
Pretend he is Alex.
Sure.
Pitch Alex on Bitcoin. He doesn't own anything.
Okay.
And we've always joked, Alex, if you're watching this, whatever, Alex, fine.
We're out.
Alex is totally producing because they're unaware.
I love Alex. So this is borrowed directly from Jeff Booth. This is not my thing, but Jeff Booth says something really, really profound. So he says that the natural state of the world and the economy is deflationary. Do you understand what I mean?
Yeah, stuff goes down in price.
Stuff goes down in price. Like, if you were to just have a fixed supply of money, like let's say I had a hypothetical $100 bill, I don't have one show, but like I laid it out and I was like, this is the world's money. Like it's $100. There's never going to be more of it. So naturally, the price of everything in that world would always go down forever. It wouldn't go up because as we get better at producing stuff, as we get more efficient, we invent better technologies, the price goes down, right? But for some reason, we don't find ourselves living in that world. We live in a world where prices of everything goes up forever, right? That's counterintuitive to how the universe should work. Why? Well, it's because the government has the special ability to make more than just this $100, right? So now if we duplicate that $100, the price of everything now is essentially doubled because it costs twice as much to buy that same amount of stuff. Because the amount of stuff didn't double, it was the amount of paper that doubled, right? With me so far? Okay, so now that money, that excess piece of paper, all that economic energy, it needs to go somewhere to maintain and preserve its value. So that's when we hear, oh, your stocks went up to an all-time high, gold reached all-time high, real estate reached all-time high. It's because the amount of money keeps increasing, and it's always trying to find a place to go to preserve its value, right?
So basically, like, the actual value of something doesn't necessarily, value of an asset doesn't necessarily increase over time, but the amount of dollars that
Exactly.
exists
To buy
purchase
it,
that
right.
does increase.
Exactly. Right. So when you compare that asset to a benchmark like the dollar, it looks like that thing went up in price, right? You're like, oh, gold went up or real estate went up. Now it costs more dollars. That's how we visualize it. But then, if you were to take all of those things, right, and compare it against Bitcoin, then literally all of those assets are also deflationary against Bitcoin. Like, take real estate, for example. A couple years ago when Bitcoin was at, what, 20,000? It took 20 Bitcoin to buy a house. Now, it's like 4 Bitcoin. A little over 4 to buy a house. And it will continue to be lower and lower and lower. Right? It'll take less and less Bitcoin. So all assets are being demonetized against a money that is fixed. It is the only thing that exists in this world that is stationary, that is fixed, a true money. And so, through the lens, through the perspective of Bitcoin, everything is going down against it.
So I have a couple questions about that then. What is the difference then between like Bitcoin and gold, Bitcoin and silver, or raw materials that there is a fixed amount of?
Right.
You can take the same exact example for gold.
Right.
It's like, okay, with this much gold right now, you can buy like a crazy mansion or a really nice house.
Sure.
You know, with this much gold back in the day, you could buy more.
Yeah, well, gold has certain qualities that are not quite on par with Bitcoin, and also there's not an exact finite amount of gold. There's also inflation to gold, as we discover as we dig up more of it. You can find one meteorite tomorrow for all we know. So, like, gold is not necessarily finite.
It's funny you say that because we just had Robert J. Minity on the podcast, and he said he bought into a penny stock where apparently they own the rights to an asteroid that is made of full of gold that they're going to find a way to mine.
Right. So imagine
you're not going to
but imagine if that were to happen. Like, what would happen? The inflation
value of gold.
Right. The deflation would, or the inflation of gold would increase, and therefore the value would be suppressed.
You know what's funny is that they found a way to make gold. Just like you could make a diamond in a lab, like a lab-grown diamond.
They figured out alchemy?
Yes.
How?
They found a way to make gold. The problem, however, is this was a big discovery. Is that
It costs more to make the gold than the gold is worth, right?
yes, but the other is that the gold was very unstable, and so they were only able to make the gold appear for a short amount of time before it disappeared.
Right.
But the fact is, there is a possible. Jared thinks I'm joking. I'm not joking.
I don't think you're joking.
Look it up. Look it up.
going.
Scientists.
Just going away.
It was unstable enough to be a solid form for
Right.
longer than however many, like a fraction of a second or whatever. But
Right.
point being is that they could find a way just to manufacture gold and have synthetic gold that would be identical to the real thing at
Yeah.
some point in the future.
No, I believe it. Yeah, I believe we will have the technology someday to make and reproduce gold on some affordable economic level. We can't yet, but maybe in the future we could. But Bitcoin is programmed to be fixed forever.
Most investing platforms feel exactly the same. You sign in, you see some numbers, and that's it. But the truth is, serious investors need more than just a place to park money. That's exactly why today's sponsor is Public, the investing platform built for people who actually want to understand and grow their portfolio.
With Public, what's great is that you can invest in stocks, crypto, bonds, options, and more, all within one app. Plus, you can even earn 3.8% APY on your cash with no minimums or subscriptions.
What really makes Public stand out is how AI is built right into the experience. From AI-powered earnings call recaps to portfolio insights, you're getting context that helps you make smarter decisions.
And here's a huge benefit. Public gives you an uncapped 1% match when you transfer your portfolio, including IRA rollovers and contributions. Again, that is just money added straight to your account.
And it takes less than 5 minutes to open an account. All you have to do is go to public.com/ice, or you can click the link down below in the description. Once again, that is public.com/ice to get started today.
Paid for by Public Investing. Full disclosures down below in the description.
So then what should the average person do with this information? If the natural state of the economy is supposed to be deflationary, things are supposed to get cheaper as time goes on, but because we're working off the US dollar, which we could just print more of, it's costing more dollars to buy goods and services. If someone has this information, what should they be doing with their money?
Well, I think it depends contextually, like what that person's situation is. But like for me, I've diversified enough to where if all of this is wrong and all of this is crazy, I should still be okay. But for me, Bitcoin is a roughly 30%, 30 to 35% of my net worth. So it's kind of high for most people, but it's still not crazy for most like Bitcoin people. That's pretty conservative, if anything. So that's just my approach to it. But it's funny because like when I look at crypto, I feel like it's such an appealing industry for a lot of people because there's this promise of like get rich quick. It's like a thousandfold of your money. And what I find really interesting is that people make a decision that sounds intuitive, but it's completely wrong. Like for example, I see a lot of people that are like, oh, I think XRP, let's just use that for example, is gonna go to $1,000, right? It's like once you've convinced yourself that it's gonna go to the moon like that, you've kind of already lost. And at that point, when people have convinced themselves it has the chance to go 1000x, they put most of their money into it, which is actually completely counterintuitive. What instead you should be doing is allocating a very small amount to a conviction like that, right? It makes sense because then you work backwards. You say, okay, if I think this thing's gonna 1000x, I'm not gonna mortgage my house and then put everything into it. I'm gonna instead work backwards and say, like, let's say I put in $10,000 and at 1000x's, then I end up with what, $1 million, right? Cool, now I made a lot of money. But if you sell your house or the equity in your house, and let's say you're like, I'm gonna go all in and I'm gonna put in 100,000 because I know it's gonna 1000x. Okay, fine. But the difference between you being right in that scenario is the difference between making $1 million, which is still nice, and making $10 million. There is a difference there for sure. But the pain between having $1 million and having 10 million is way less than the pain of being completely wrong and losing your house. Does that make sense?
This
So it's
does
just
make
like,
sense.
so if you really believe this thing's gonna 1000x, don't put your entire life savings into it.
I
Put in a
like-
smaller amount. Does that make sense?
Yeah, I like Alex Becker, his approach. He made a video a while back when we were talking a few months ago with Ethereum.
Yeah.
And Ethereum at the time I think was like $1,500. This is recently when everything kind of fell. And he says, guys, I think there's a 50-50 chance you're going to lose everything. That Ethereum's going to go from 1,500, you're going to lose all of your money.
Right.
But I think there's a 50% chance it's going to go to 6,000.
Okay.
And so that's an asymmetric reward.
Yes.
Risk versus reward that, hey, you could, the 50-50 you lose, but in the other 50%, you could 3x your investment.
Right.
And I thought, you know what, it's a great phrasing.
Right.
And I invested an amount where I'm prepared for that 50%.
For
Then
sure.
I bought in at $1,500.
It's
and
all
now
risk management.
4,200.
Well, that's exactly
Yeah.
the great point that you brought up. It's all risk management. So if you see an asymmetric bet, that's exactly what I'm describing. Don't put your entire life savings into it. Just put enough to where if you lose it, it's not a big deal. And if you make it, it's still a lot of money. That's essentially a roundabout way of saying that.
So how are you investing your money now? If you have 30 to 35% in Bitcoin,
Yeah.
what is the other 65% looking like?
It's real estate, cash, stocks, and miscellaneous things.
And what's the best investment you've ever made?
The best investment, definitely by far Bitcoin. By far.
Really?
Yeah.
And it's not even close.
Not even close.
What's the worst investment you've ever made?
Oh, worst investment?
The
Probably.
drones.
I mean, that's not an investment. That's like a consumer thing. I would say probably so far, honestly, out of my bucket, real estate.
Really?
Yeah.
But how have you made money in real estate?
I still made money, but it wasn't as much money as I could have made if I had bought literally anything else. It was like the S&P 500 or anything else.
NFTs.
That's not an investment. I never considered that an investment. I considered it as like a marketing expense for YouTube. But Graham,
Yeah.
you buy a lot of Ethereum, right?
Yes and no. I bought at 1,500, and I've not touched it since then. I've not added on to it.
Oh,
I've
okay.
not. Yeah. I still have that. It's up almost 200%.
Well,
since then.
what's your like theory behind why Ethereum will be valuable someday?
I think the fact that Bitcoin is as valuable, it's a pure speculation bet that some of that's going to funnel into Ethereum.
That's it?
And-
It's just like
yeah,
it's like a
it's it.
second place thing.
Sure. Yeah.
What?
Thanks. Yeah. But then again, when you look at Ethereum in comparison to my entire portfolio, I think it's like 0.1%.
Okay.
So it really, I don't care. If it goes back down to 1,500, I don't care. This sounds so out of touch. So out of touch. There was a Rolex Oyster Quartz that I wanted, and it was $12,500. And I thought I would invest in Ethereum to pay for the watch.
Okay.
And I was going to sell it when it hit like 20,000 in profit to be able to cash out, pay the tax, and that way I get a free watch. And I just kept it. And now I'm up quite a bit. So I got a free watch many times over from that investment. That was all it is. It was the same thing as me going to a casino, except it was that 50-50 risk reward.
Right.
Where I was like, all right, 50% chance I lose it, or 50% chance I get free. I can just buy the watch that I wanted.
Right, but you're still
And it's
holding on
free.
to it.
Yeah, I haven't sold it.
Okay. Do you buy any Ethereum, Jeff?
I don't think I have any Ethereum. I might have like a couple grand
Okay.
in Ethereum, 5 grand in it.
Okay.
Yeah.
Well, from my understanding, and like this is again that goes back to like risk versus reward management, is I think Tom Lee from Fundstrat, I don't know if you guys had him on yet.
No.
And I guess Larry Fink from BlackRock.
Mhm.
This is like their thesis for why Ethereum could someday be like the thing. But here's why I could never like put in a ton of money. So here's kind of how it looks for Ethereum. So Ethereum is supposed to be the blockchain that will be the rails for the tokenization of a lot of assets across the world, including physical assets like watches, art, real estate, and things like that. So we're going to digitize and bring things like real estate onto the blockchain, Ethereum's blockchain. So like for example, JP Morgan, they tokenized, treasury bonds. So they actually tokenized treasury bonds on Ethereum. And then BlackRock tokenized money market funds on Ethereum's blockchain. And I thought that was really kind of interesting because I can imagine a world where, for example, like let's say I'm an investor and I want to buy a REIT, right? But I don't want like a specific REIT that I see as an ETF. Instead, I'm like, I love Hawaii and I love this street or this area, like this area called Lanikai, right? I think it's going to be a strategic street for real estate. So I want specifically this section or specifically that house. And maybe that corporation or that owner could issue some percentage of that house. Like let's say like they issue 50% or 10% or whatever it is. So that on my app, on my brokerage app, I could be like, you know what, instead of buying an ETF that's a REIT, I could buy this area, like Summerlin, or like Henderson, or this specific street. So you're going to get so granular because of this tokenization, and it's going to be accessible to everyone. And I think it's a possible reality that happens. So, and that's the same thing for watches, maybe cars. It's like, well, you know what, I want this like $20 million Ferrari collection from Hamilton, the guy you had on, right? But I can't afford a Ferrari. So maybe that guy issues some percentage equity in his collection on the blockchain. Maybe that's Ethereum. Does that make sense?
Yeah.
So now I could buy it in my brokerage app. Like, that's gonna happen. That's what BlackRock sees is gonna happen. And presuming that it's gonna be on Ethereum's blockchain, that's when you get all the gas fees and all the burning mechanisms, and that's when Ethereum could become deflationary, and maybe that's how it becomes valuable. But the point I'm trying to make is, like, creating this, like, universe which might happen someday is, these are assumptions of assumptions of assumptions of assumptions, right? Like, we're making so many assumptions about it. That, like, is it going to be this way? Will it actually be Ethereum? Or will it be Solana? Or will it be Cardano? Or something else? We don't know. And so the more assumptions there are baked in, the more you could assume the price will go up. Like in Bitcoin's case, the difference between Bitcoin at $1 and 1,000, there's far more assumptions that were in place than there are from 100,000 to 1 million. Like, that's only now a 10x, and that's because so many of Bitcoin's early assumptions, like adoption by Wall Street and securitization with ETFs and all these things, like, they've happened. Adoption by corporations, adoptions by countries, like, these are all things that have happened already. So now the jump between 100,000 to 1 million is only 10x. Like, it's still a lot of money. There's nowhere near the jump between $1 to $1,000. That's 1,000x, because less assumptions had come true.
So what has to happen for Bitcoin to hit $1 million?
We talk about, like, these cycles, like these mega cycles that Bitcoin goes through. I don't know if we'll see another huge one. I think it'll be a slow, and by slow I mean like still like 20 to 30% a year, melt up to 1 million from here on until like 2030 or whatever the year's gonna be. Like, nothing has to change. Just keeps on going at the same rate that it is. You take all the crazy assumptions out of it, I still think it ends up at 1 million. Like, inevitably.
So isn't Bitcoin about 1/10 the market cap currently of gold?
Yeah, about 1/13 or so, yeah.
I can't help but think that it has to be at some point 1/3 of gold, or half.
I think so too. I think it's inevitable, yeah.
But then I can't help but think, if I think that way, it has to be priced in.
Yeah.
Like this isn't like some mysterious sort of like no one's ever thought of that before. People are paying the price today with everything currently priced in as to what they believe is going to happen with it.
Do you remember Chris Camillo from Dumb Money?
Mm-hmm.
I really like his thesis on Bitcoin. Like, he does not care about Bitcoin. He's like, I'm just a pure, like, social, what is this thing?
Social arb.
Social arb, you're right. Social arbitrage. And his entire thesis is really simple. It's just a reshuffling of monetary assets from things like gold and real estate and all the things that we will inherit from our parents and our grandparents. And it's like, well, thanks for the $2 million house. I can't afford the property taxes on this thing. I'm going to sell that. And gold, thanks, but I don't really get gold. It's not part of my generation. I'm going to sell that. I'm going to put some of it in Bitcoin. I'm not going to put all of it maybe, but some of it. And it's just like a simple reshuffling of assets and money from all of those back into Bitcoin. And a little bit from each little bucket, from bonds, from gold, from watches, from cars, from real estate, they might not be able to afford to keep up with, and it goes into Bitcoin. And that's like a slow melt up to 1 million.
Gold is becoming cooler now.
It is, yeah, that's true.
That's the other thing, is that I'm seeing a lot of people, our own age,
Right.
now interested in gold, just for the fact that it's gone up in price. They don't. But they just know, hey, it was, $1,000 5 years ago, and now it's, almost 4,000 an ounce. And just on the basis of that, it makes money. I like it now.
Yeah.
And so gold is coming back in style, whereas before it was kind of unpopular. But it does seem like overall people are more likely to buy Bitcoin who are younger than gold.
I
If they
agree.
had to choose between the two.
I agree. I don't think I'm that particularly old, but I miss the gold train. Like, I don't own any gold. I wish I did, but I don't have any. And I imagine the younger generation is totally out of it too. Maybe they're a little more in tune with it now that you said the price has gone up, but I don't own any gold at all.
What do you think about altcoins?
I think there's a lot of interesting projects. I'm just not into any of them. I think they're a distraction for the most part. I'm just focused on Bitcoin mostly. And even Ethereum, I'm like, I don't know. Like, all those assumptions we talked about, they might come true over time, but I'm not interested in venturing beyond it.
You know what's going to be really interesting? At some point, they're going to do an ETF of the top 10 crypto
I think so,
holdings,
for sure.
just like the S&P 500.
Yeah, I think so, too.
Except of that.
Yes.
That is going to be very interesting, and I think that is going to spur the market. Because I would place, let's just say I have 5% of my portfolio in IBIT,
Yeah.
but then they offer an ETF of the top 10.
Right.
Oh man, I would probably put a percent or two into that.
Right.
I think that is a huge opportunity because there's a lot of projects out there that are interesting that I would never invest $1 into on their own, but I would into an ETF. What's also interesting is that years ago I did this whole analysis on the top 10 cryptocurrencies by year, going back to like 2015, and the consensus was that really almost all of the profits in cryptocurrency came from Bitcoin and Ethereum, and that the chance of making money on anything else was pretty much like a moonshot. It was like a 1 in 100 chance. And so even if you invest in 100 different projects, you're gonna like break even because 99% of them are gonna lose money, but that one is gonna have 100 extra. And so it's just gonna balance out how much you make and live. But overall, it was really just the majority of profits came from Bitcoin and Ethereum. That's it.
Yeah, Europe actually had a product, an ETF that combined the top 10 cryptos for a long time now. But I imagine that if it came in the US, depending on how it was like allocated, if it was weight based, which I'm guessing it would be like 80% Bitcoin, 10% Ethereum, whatever it would be. I think it would be a really interesting product, but I also think it would be kind of like a Trojan horse. I think.
Wow, there's so many EVs. EVs in this team.
EVs.
Is this a full EV team? We have 4 different EV evolutions on this team. Wow. I've never seen a team with this many EV evolutions. Let's see if they're any good at it. I think we're just missing Flareon, Jolteon, Sylveon. I don't think Flareon and Jolteon are big on this.
Performance perspective, they would just be diluting it. Like, it's not worth it. I wouldn't be buying it, but I can see how it's interesting too.
It's also interesting to see how many brokerage coins are going up in price. Like the BNB,
Yeah,
$1,000.
that's interesting.
What?
Yeah, I'm not messing with any of it, man. I'm just keeping it really simple.
Good. Same. I just do IBIT.
Yeah.
It's so easy for me to do IBIT in a stock account, and then I don't have to worry about self-custody.
Yeah.
Losing access if you forget the password. It's like I hate all of that. I like the simplicity of IBIT, and all I care about anyway is the investment purpose of it.
The downside of IBIT though is that the year-to-date performance is there's a delta of like 6%, which is pretty significant. Like if you look at Bitcoin's year-to-date performance, it's 6 or 7% higher than IBIT's. And I'm trying to figure out why there's such a big delta. Like that's a big delta. I know the expense ratio plays a small part of that.
Very small, but the reason is that the IBIT trades on a price that isn't one-to-one with Bitcoin.
Right.
So if everyone's buying an IBIT, there's going to be a premium that the stock's going to trade at a higher price than the underlying coin itself because there's more demand.
Yeah,
But that also might be, there could be at some point, it trades less than the underlying asset. And there might be an opportunity to arbitrage that if that ever were to happen. But yeah, right now there's so much demand, it's trading at a premium.
Right. I mean that's a lot of premium to give up though, 6 to 7%. Like imagine if it's 6 to 7% every year, compounded over like 20 years. Like that's huge. Isn't that a huge argument for self-custodying it?
Could be, but then you're also paying quite a big spread on a place like Coinbase. Like I remember seeing it recently. Even Robinhood is actually one of the cheapest places to buy Bitcoin. It was trading at 116.5, and if I want to buy it, I have to pay like 117, and if I want to sell it, I sell it for like 115. And that's where Robinhood makes their money on that spread. But that's a pretty big spread.
It is, but I don't think it's
1% right there to buy or sell.
For sure. But like 1% compared to 6 or 7%, that's still not.
Could be too early to tell too. I'd like to see that over 5 or 10
That's
years.
true. That's true. We should look at it. From
It's a bit new.
Right.
But yeah, sure. Up until this point, it depends if you care about buying Bitcoin itself. Like, what are the advantages of actually buying Bitcoin and custodying it yourself?
Well, those coins can't be rehypothecated. They can't be lent against by someone else. If something were to happen, you have full control over your coins. If an exchange collapses, you have to rely on the government to pay you back, and that sometimes takes forever. There's a lot of cool benefits to it.
Yeah. What about NFTs?
What about?
What happened to NFTs?
I don't know, man. The fad died out, right? The whole, I remember talking about it on my YouTube channel, like, when we hit a peak, when people are spending millions of dollars on pet rocks, like JPEGs of pet rocks, yeah.
Remember this, they're going for $400,000.
Sure.
And people were joking that you could just right-click on it and
Yeah.
then, like, have the same thing. I never understood the NFT.
My theory behind why NFTs blew up is it was hugely a result of the government print. That's all it was. It was the PPP money, it was the stimulus packages, it was all of that stuff. Like, people didn't know what to do with their money. And it was just boredom from sitting at home, and I think that was that phenomenon. And I actually think NFTs will come back, but in a completely different way. Like, it's not going to be, hey, look at my pet rock, it's worth millions of dollars. It'll be maybe more in the digitization of like events. Like if you want to get like some concert tickets or something, that'll be an NFT, or maybe depending on how they securitize real estate, maybe those will be some forms of NFTs. But I think they'll come back from a utility perspective, but I don't think they'll be the same as what they used to be.
And what about CryptoPunks? Or Crypto
Yeah.
Kitties?
I don't know anything.
What happened to Bored Apes?
I don't know. I don't know. I have no idea. I'm not following any of it. I know they're down like 90%.
Yeah, they're down a lot. CryptoPunks seem interesting to me.
Yeah, well, doesn't Chris Camillo own like a bunch of them?
Dude, Chris, we were talking in like 2021. He was buying, I forget what it was, like these nuclear sheep. And he's like, if you buy these nuclear sheep, they give milk. And the milk could be used to then buy more. It sounds dumb. It's in a video. We have it in a video and a vlog. We were recording this. I didn't understand it, but you could like milk these sheep. And then use the milk to buy more nuclear sheep, and they're about to like spawn. You
Yeah.
could breed these nuclear sheep to like give like
Offspring, but then it's randomized to like one, and it's
Sure.
it reminds me of like
That's a good game.
Axie Infinity.
Yeah, I remember that. Yeah,
A bit where people were making like thousands of dollars a month playing this game, and then like breeding the birds or something. I don't.
Jack, do you play with this stuff? I don't know, man.
I do not play with this stuff. This is more of Graham's wheelhouse right there, breeding and playing with birds, milking sheep.
Did you put that in your I don't know, the only alts I have are just like the same ones I've always had at Omi and my NFTs, like the Spider-Man one, and I have no idea where they're at or what they're doing. They're still around. I still have them. And
Would you sell
maybe-
them?
I totally sell them, yeah. Like, I've forgotten about them, but if they're ever worth anything, maybe I'll come
Mail.
back someday. Maybe we'll
Yeah,
they'll
it's
actually
a-
return. I don't know, but they're still around. I
Mate,
still have them. I never sold them.
What's crazy is that we used to have this vlog channel.
Yeah.
Graham Stephan After Hours, and all the videos
I
are still
remember.
there. And we were covering a Logan Paul box break.
Okay.
And Grant Navarre purchased a pack of cards, I think for like $20,000, a first edition pack. But then, in addition to that, Logan Paul was selling the NFTs of the box break.
Okay.
All of them were sold out. And all the NFT was him pulling out a card, and it was like a hollow. And he was selling these for like $15,000 to $50,000. He
Wow.
wasn't forcing anyone to buy them, but
Right.
people were spending $35,000 to get an NFT of just Logan Paul opening up the card and showing a hollow.
You know what I think? If it ever comes back and is worth anything, my theory is that it'll be like 50 years from now. When we look back at these moments, at our youth, we look back at these memories so fondly, and we're like, remember when that was a thing? And we're all like crypto billionaires or Bitcoin billionaires, like, I'd buy that again. Like that, I could
like
see
Pokemon
that.
cards.
Yeah, like it's like a nostalgia thing. Like I could see it becoming a valuable thing when it becomes nostalgic. Like right now, it's just too close to home. It just happened kind of recently. But I can imagine if like 50 years from now, we'll look back at it like, that was the first NFT ever, the CryptoPunk or like the Spider-Man or whatever it is. I could see that, kind of like Pokemon.
I try to think of that all the time of what is going to be the nostalgia play today.
Right.
All the time. Like the 2005 Ford GT
Yeah.
was a nostalgia play.
It is.
They used to trade it like 120 grand. They couldn't sell the cars. And now it's like you get that car because that was the car you admired. Pokemon is a good example of that too.
But are you ever afraid that that's sort of such a moving target that beyond a certain, it's not a thing anymore?
Yeah, of course. Like old cars are plummeting in value
Right.
because the audience for that is they're passing away.
Right.
No one cares.
That wasn't a part of their
Like,
childhood, right?
But the original iPhone in the original packaging is now selling for like $70,000.
Right.
Or the original iPod, like revolutionary. Yeah, you go back, and that was recent. And I wonder, what is that today?
Right.
What's something today that is going to be, oh my gosh, I can
Right.
keep it sealed, and in 20 years I'm going to make a fortune.
100%. Yeah. That's the Chris Camillo investment.
Yeah.
That's the social art thing. But it kind of also makes you think the other way. Like,